So I got to go through my scenario again of who I am. Here you go, buddy. Prepare ye in the name of Washboardjim. Should have put a put. I was almost one. I don't know why I didn't think about it. There it is. There it is. There it is. There it is. Okay. 9. The 692 strikes at 89 cents. And this is a scalp. 3 black crows. 89, and we got 84. $6.92 at 0.89. What a setup. Do, re, mi, fa, sol, la, ti, do. Do, re, mi, fa, sol. La, ti, do. Do, 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 do. No. Damn it, come on. We're at the 200 on the SPX. Slash ES is at the 200. And we couldn't break my shoulder line, so that's going to be resistance. We got a spinning top off the 200 on the SPX on the 30-minute. We're at $100. Come on, break out, you beach. Do you know who I am? 102. I'm up 100. Who doubted me? I'll whip you 20 times. I got the switch out. I'm not done yet. See how it take the SPX off the 200? I called it. And I'm not Brandon. Symmetrical flag on maps. Penny stock. Never mind. You'll go over here. Regetta. When they start calling quantum out again, you want to jump in RGTI. CrowdStrike. Come on, breakout. Give me 120. We're at a triple top. We're at a quad top here, breakout. On candlesticks on the 1 minute. We got a breakout on AMD. It's like a go-to stock every day. I heard some good shit about Japan today. That a lot of people got elected to back that lady. So it could be a reversal play. Magnificent Seven, Nvidia, and Microsoft are the only ones up. Today's loser is Google and Amazon and Meta. What? I just see something that said 60 some bucks on there. I saw it. It wasn't there though. It's not down some 60 bucks. At a triple bottom on Meta. Watch triple bottom on Meta. Another F minus for what? I'm not over yet. What'd I do? Forget to vote on something? How dare you? $0.96. Here we go. You'll be eating your words in a short period of time. And I expect you to pray after that. There was some gases coming out from the fountain upstairs in the drain, and the plumber walked by it, smelled it, took a big sniff, told me how to fix it. Run a little bit of water down there. I run about 5 gallons of water down it. I got to run some vegetable oil down it, not lard, but vegetable oil. And that'll stop the gases coming up from the septic tank. I'll be running 5 gallons of water down those drains once a month. Ooh, there's the knife. Back to the VWAP. We're at the VWAP. Boeing. Now what's that? Oh, what's that cloud? Come on. Oh, I have to get out of this thing even if this thing don't break out. We're on the 63 on the SPY. We hit it 1, 2 bits, 3 bits, 4 bits. The day trade is over. I mean, the scalp is over. Now I'm in a day trade situation. Well, maybe not. I can't. Let me see what time I got in this trade. I still might have time for the day trade. For I'm Washboardjim, I don't fuck around. I got a lot of time to scalp this trade. I got entered at 950, 850. So, anybody that's new to trading, your first half hour of a trade, if you're in a trade, is called a scalp. If you're in and out. If you're in longer, it becomes a day trade. That's into the day of close. And then after the bell rings, it's called a swing. And my goal is to hit 691.57 or a little shy of it and get out of this sucker. And then I want an apology. Right now. It's 116, baby. I accept your apology. Only a man will stand up to his wrongs. How dare you? Lots of passive aggression. Well, if you passed that up, that's for sure. Woo! Anybody else want to give me a good grade? If you followed through, you're at 117. You could have got that at 79 cents. 125? Oh. Okay, enough of me. La la ti da. $131. For I'm Washboardjim. I'm the founder of the Sneaky Snake trading strategy. I'm also one of the sexiest men in the world. My waist size is 30. My breast size is 39D. And my butt size is extra small. For I talk about chart patterns, moving averages, and not being a bunny rabbit. I've never seen anything like it. Jim, I got a question. Hello? I have a question, James. Do you snort cocaine? No, I never have, and I never will. That's good to know, ain't it, Room? Woo! Man, that was an exciting trade. It really was. So I didn't let the fearmongers get to me on CNBC. I think this should have been taught a long time ago, and I think I mentioned it a lot, that we were way overbought and not to hold a lot of stocks and to take your time, that there would be a time where you'd want to jump in the market with everything you got. I also mentioned Friday that we could see a dead cat bounce, which is one more dip in the market, maybe back to a double bottom at the 200 on the daily and the weekly. They still think tech's overbought. I don't think Wall Street learns a damn thing about innovation. What can really change an economy, and how to look for the positive things about it instead of the negative. Now, when AI started coming out, they were all gung-ho about it, pumped up, excited, and then all of a sudden they became sour grapes because Trump's in office. I think the market's still strong. The fat cats tried to manipulate it. They don't know how the private sector works. They're waiting for the fat checks from the government. That's all they care about. Period. That's my speech. Now that don't make sense. $18.47? Are you kidding me? Who bought that at $18? JP Morgan. somebody got him a hell of a deal. And I bet you that fucker was rigged. That can't be true. There's no way. And we're back to 97. We're at the bottom of the cloud of the 9 and the 21. We had a crossover. I really like to see it touch that 63 again and keep a higher high, higher low. There's 98 cents just a second ago. We bounced off with a hammer. But you see this here? So I'm going to show you something here, a little trick. Pay attention. We got a dragonfly. Go to the body of that candle right there and run it to the body of that candle. Pay attention, Randy. Take the bottom of this candle and run it to the bottom of that candle. That's right to the 63 and the 50. Set an alert above this here tweezer top. Jim, I got a question to ask you. That was a good call, by the way. 97, now it's at 114. But why do you use the 1 minute time frame? That's a good question. And I got a good answer. So I'm sitting here looking at this thing. And I'm starting off with a 30-minute time frame. I've already looked at the daily and the weekly. And I come to the 30-minute time frame and we bounce off the 63. I go to the 15-minute time frame. We bounce off of a double bottom. I go to a 10-minute time frame. I'm looking at all these time frames before I even take a trade. And we bounce off the 200 EMA. So far, everything looking really positive. I go to a 5-minute time frame. And we got a double bottom. And we got an inverse head and shoulders. Now we have a breakout to 134 from 97 cents. Thank you very much. So I want to get in this trade at the best possible entry as I can. So I go to the 1 minute. And we got a double bottom on the 1 minute verified. So everything was at a support level in all them time frames. So I use the 1 minute to get a better price in the trade than I could if I took it off the 5, if I took it off the 10, if I took it off the 15, and if I took it off the 30, or even if I took it off the daily. And the bigger the time frame, if I look at it that way, I'll be looking at a swing if the market conditions are correct. So I use the 1 minute because I see more patterns. It gives me a stronger direction of where it's going to go. And my strategy is all about chart patterns, moving averages, and being in the now. The bigger out, in time frame, you're not going to see that many patterns. You're going to be using candlesticks for your entries. But at a 90% trade rate, I'm looking to make sure all time frames are ready to be traded. I have support in all them five time frames to get into trade. And I'm trying to look for the best entry on a 1 minute. We're at 144 right now. $145. $106 to $143 and I'm out. So that tells, all them time frames are telling me that we're bullish. I had every one of them stop at one of my critical support levels off the moving average. Every one of them had a chart pattern to read off of. So you got to take time out and look at all your time frames. Does that make any sense to anybody, or am I just talking shit? Okay, I'm pretty excited. I'm up to $1,000. Almost $1,000. Time to retire. I love trading the SPY and the SPX. Why? Because I can keep in the now. Okay, I'm pretty excited. I'm up to $1,000. I can keep in the now, and I don't have to worry about little bitty news hitting them tickers. Just keep up with the now, and you can trade the SPY and the SPX. When I'm trading stocks, I have to pay more attention to the news that comes out, and you could wake up one morning and lose everything. And I don't have to swing the SPY or the SPX. I get in and out of them. I think today I could get a bunch of trades in, but I want to get comfortable, take off my shoes, put on my slippers, walk into the kitchen and die. Now make some apple cider. Anybody stuck in a trade, let me know. Here's a song that Zach Morris wrote for me. New highs. Boom, boom. Boom, boom. Boom, boom. Boom, boom. Boom, boom.
There's a dude down the street with his old
Washboardjim, sneaky snake. Boom, boom, boom. Boom, boom, boom. Sneaky snake, oh, he likes some patterns, moving averages. Wait a minute, the 200 SMA, the 200, Sunday. Boom, boom. Boom, boom. Boom, boom. Boom, boom. I'll put. Damn, you're sexy. All right. Nice. Woo! Boom, boom, boom.
$43 million. Full year guidance came in line as well. Shares were already down more than 30% before today's open. All right, let's welcome back to Morning Trade Live and bring in the big picture now. I'll welcome in the team from Charles Schwab. We have Kathy Jones, Chief Fixed Income Strategist, Schwab Centre for Financial Research, and Jim Farioli, the Director of Digital Currencies Research and Strategy. Very good morning to you both. Kathy, I do want to start with you because we've had the gilts under pressure this morning off the back of the fresh political crisis over in the UK with respect to what's going on with Keir Starmer and his staff. We've got the Japanese election victory landslide by the Takeichi LDP there, and we've actually seen a move up, but interesting move in the yen, not to say the least. And then the Chinese regulators telling the banks to limit their US debt exposure. Of those three stories, which is catching your eye the most? I mean, which one is having an impact the most, do you think, on the US debt market?
You know, I think the most important is probably the Japanese story, although China warning the banks to limit their exposure to US treasuries is also notable. But in Japan, because Japanese investors are, you know, the single largest holders of US treasuries outside of the United States, it's very significant. When Japan's yields rise, that puts upward pressure on US yields because there's a trade-off that investors there will do. And right now, there's a strong propensity to repatriate their funds because their yields are moving up. I think the Japanese yen will actually, contrary to popular opinion, probably move higher rather than lower on this. And that means that they invest less abroad, they invest less in US treasuries, and that tends to lift yields, not just in the US, but around the developed markets. So I think Japan is a big story here.
Yeah,
We're back down here.
They're calling it the half Takeichi trade this morning because usually that is characterized by a weaker yen, but we are seeing the opposite today. Jim, just getting to you, very good morning. Obviously we've seen these massive sort of fluctuations in Bitcoin. We did see a nice recovery on Friday. We were off 50% from that all-time high in October. We're pulling back once again today. What is driving all of this?
Bitcoin investors are having a debate as to whether we're in another Bitcoin winter. If you look back historically in 2014, 2018, and 2022, there were these large drawdowns from previous all-time highs where Bitcoin fell over 75%. Each of these drawdowns started in the fall following, in the second year following Bitcoin's halving. And so from a timing perspective, we've kind of met that mark, and we've had about a 50% drawdown. And so what believers of this theory may be missing is that the biggest driver in Bitcoin's moves from 126,000 to about 60,000 has actually been deleveraging in the derivatives market. First, we had an announcement on October 10th that saw, it was about tariffs on China. And that day we saw about $20 billion in levered futures get liquidated. Following that, we had several months of range-bound.
We're at support again.
Where the dollar debasement trade really gained traction. And in that trade, we actually saw investors pledging Bitcoin as collateral to then take long positions in precious metals. Following corrections in those markets, the precious metals markets, we then had collateralized Bitcoin get liquidated. And so that's really been the story lately in Bitcoin. I wouldn't put it on the halving cycle or a Bitcoin winter. It's really specific to leverage in the Bitcoin markets. As Bitcoin and cryptocurrency has grown in market cap, it's become more integrated with other asset classes and with movements in the financial markets.
Understood. Kathy, just getting back to you, obviously it's going to be a very consequential week with the delayed jobs data we're getting on Wednesday and the CPI on Friday. How much do you anticipate that's going to move the needle?
I think it's going to be very important. The employment numbers not only are for this month, but include the benchmark revisions from March of 24 to March of 25. And we've already been told that those will be big downward revisions. And nothing in the data suggests that we won't see possibly even bigger downward revisions. So it's going to paint a very different picture of the labor market than I think is the consensus right now. And currently the labor market's kind of confusing, right? We have low hiring, low firing, very low unemployment rate, but very low job growth. And this is going to probably make it look like that job growth is even weaker than we anticipated. So you put that together with probably a favorable CPI, and I think it's probably not a bad week for the Treasury market, for the long end of the market, but it also will probably increase expectations of that Fed easing coming on the back of the nomination of Kevin Warsh. I think the market will tend, if it's in line with expectations, probably
SPY to hold here, 110 at 692.
this week, but both are important numbers.
Okay. As Kathy just said there, Jim, I mean, both important numbers. No doubt she'll be watching the fixed income side of the market. So how much is this expected to move the needle? What do you expect
133, baby.
The reaction across the crypto and the metal space?
How does he do it?
So one of the things that we saw 2 Fridays ago,
today's a big day to make money. If you can read the charts.
The nominee for the new Fed
147.
The initial driver that caused deleveraging.
Jim, why'd you take that trade?
He was perceived to be more
I'm out.
hawkish Fed chair based on past comments about the size of the Fed's balance sheet. And so ultimately, it's a wait and see as to how that will impact markets. We think there are several things that could work.
Man, this is an easy day.
First off,
I'm not
crypto is
joking around.
largely a momentum.
Man, we hit the 200 EMA and SMA. Do you know what that means on the weekly and daily time frame? Did anybody watch the video this weekend? I want to see at least one eye in the room. We're at 170. 2 off that call right there. Damn, 75. Still kind of didn't get it. The 200 EMA and SMA off the daily and the yearly time frame is a 95% reversal. We could have a small bounce and another pullback to a double bottom off the 200 SMA. I'm just saying that's a scenario you got to look at. So you got to keep scalping. I'm not fully confident yet to go ahead and swing them, but I'm 100% confident to be scalping right now in a very positive manner. I've been waiting for this for months. If you watch the video, I showed many examples in the video. Just one right after another. Every stock ticker I run across. Okay, new high. So the reason I took this trade is we got a yin yang. More or less just run that straight across. We got a yin yang off the orb. And we're still above the moving averages. So I have 3 reasons to take that trade. We pulled back to the previous resistance. We held up above the orb. And we held above the 50 SMA and all the moving averages to take that trade and run it up to a double top. And that's what I did. And then the sucker breaks out to 193 from 110. So that it's going to pull back again. Your first support is going to be right here at the double top breakout. And your second support will be a double bottom. And I have 4 reasons to take it now at a double bottom, yin yang, off the orb, above all the moving averages. So if it did pull down to 692, I'd be more than willing to get into the trade and go and take it again. As long as we stayed above the orb. Now we're at 212. $216. What's the difference? The EMA is a fast moving average, to where the SMA, it's price action, the EMA, and the SMA is the action at the beginning of the end of the day close, averaged out 20 days. it's a slower moving action. Many scalpers will use the EMAs, and I mix them up. EMA is a fast action trade-off price action. SMA is trading off the day close with an average of so many days. No, they're not. They're not the same thing. Just a fast action, just price action. As it goes along throughout the day. And the SMA is a closing action calculated over a period of time. And we keep going higher. Now we got 3 white soldiers off that spinning top on the 30-minute. So you got to keep an eye on them candles too, You look more at the candles on a bigger time frame than you do. I look for patterns on the 1 minute, maybe on the 5, but I'm looking at candlesticks throughout the rest of the time frames and what moving averages they hit. The closing of the candle. Oh, I'm excited. I'm gonna take a little break, get situated, and get my. I'm really craving a apple cider, hot apple cider right now, spiced. I think I'll have soup today. Hello, Tony. I'll be right back. I'm going to put this on for a second.
Well, as long as the VIX stays under 20, I believe the market could settle and try and rally. But if we continue to see the VIX spike and apply a lot of pressure on that $20 price, it's never good. Whenever we see volatility in the markets, it's never bullish. I would expect things, and I would expect traders to remain short term. As an investor, I wouldn't be ready to buy in on dips just yet.
No, I wouldn't either. I'd wait. One more pullback.
It rings a lot of alarms seeing, Microsoft, Meta, Amazon, and Google all crater off of earnings, or shortly after earnings, and not lifting as fast as we would normally see them come off their floors.
Yeah, it looked like the rest of the market had been cheering, though, on Friday, despite Alphabet and obviously Amazon lower in that session. Hey, Charles, always appreciate it. Thanks so much for joining us today. That is Charles Moon there, stock strategist, Prosper Trading Academy. Moving on, coming up, we will take a closer look at these sectors on the move this morning in the news that is moving foreign markets.
Morning movers, be the first to find out what's shaping early market action. Tech check, options corner, futures focus, technical analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
Stay connected to what moves the markets. Download the Schwab Network app and stream anytime wherever you are.
Live from Chicago, this is Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that shape investor decisions, all with
Marley.
expert analysis and actionable context. From inflation data to sector rotations, earnings to policy.
Yummy.
With a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
It's weird how that looks on her dress.
Welcome back to the Morning Trade Live. I'm Sam Barnett.
Kinda
coming
nasty
to you live
there.
From the New York Stock Exchange. It's time now to take a look at the sectors that are moving markets.
Boeing moving up some.
Exchange to exchange. We are joined once again by Kevin Hinks. And Kevin, I suppose you could say that.
I think we're going to get a pullback.
So, Max, we've picked up.
We got
a bit
three
here.
white
It
soldiers.
looks like, we've got Nvidia off to the races. Just talk us through what you're seeing out there as far as the sectors.
Hello again, Sam. Yeah, the last time we talked, I believe we had 7 or 8 of the sectors in the S&P 500 down, but and just a couple up. Now I see 6 up and 5 down. So this market has firmed up and turned back to the upside. The S&P 500 up about 0.3% to equal weight, still up 0.1%. So the equal weight underachieving versus the whole index, which tells me the leadership has taken back over, and all you got to do is look at the visualize. You see Nvidia, you see Microsoft, Oracle, Palantir. All the leaders are back in charge of this market, going higher. I think it's a nice bounce back. I like the fact that after a horrific earnings event and the trade below $400, you're seeing Microsoft.
Horrific earnings because the government shut down. They weren't pumping $18 billion in the economy every single day. $18 billion. I expected earnings not to be that good. I expected to have a dip in the market to the 200 EMA and SMA. Now I'm expecting a dead cat bounce. If we go below the 9 on the 1 minute, I'll jump in a put. We got a double top, which is bearish. SPX. The 6930s. At 340. This is off 3 white soldiers on the 5-minute. And I got 3 contracts, and that's all I'm getting. We could come down and hit the 63 and the 50. A little bit above it. Now you're going to get FOMO. People are going to want to chase this stock and jump in it right now probably, or higher when it was higher. I'm not the FOMO kind of guy. See, we're squeezing right now. This thing could easily pop above that 9. I get better price action when I'm using the 1 minute on these candles, and I'll know a little bit ahead of time to get in or out of a trade. We got a double top breakout right here. Now we're squeezing. We're going to know any second here what's going to happen. Any second. See, it broke out. Didn't take long to figure that one out. Now we're coming to a triple top. So that's going to be my exit idea if we break it. And then I'm going to go. Now that don't make sense. Oh yeah, it does. Well, we broke it. Dang. Squeeze between the 9. I could tell that thing was getting ready to squeeze. The moving averages were curling up. That'd have been a good sign probably. So we hit a triple top going sideways.
Oak.
Still in it. $285. Got a huge megaphone on the 1 hour. Okay, I gotta make a decision. I'm not gonna sell. I'll wait. We got a rising wedge. See, look how clean this entry was down here. On the 1 minute, you had a hit right there and it bounced. Then you had a double bottom right there. Now, shit. It's going to break out. I should go ahead and get out of this trade. I'm down 300 on it. I think we broke resistance. More green on the Magnificent Seven. Well, that's strange, huh? JP Morgan. This might end up being a day trade. Tesla boom. Tesla stock edges up. A bottom might be in. Barron's. Performance comparison. Tesla and competitors in an automotive industry. Tesla stock is down. What's next? It's down. And then Barron's right after it. Tesla stock is down. What's next for shares? And then right above it, 1 minute later, or 2 hours later, Tesla stock edges up. A bottom might be formed. You cannot trust these. They can't predict a support. They just can't do it. None of them do it anymore. Well, but Schwab. I think it's probably too close to my mouth. Snow's up $7. It's got a long way to go. $90-day, we hit my support, 154.94. And if you look at the daily, it weekly, it's off the 200. So here's another example. If you watch that video, I got example after example after example after example of many stocks on my watch list that hit the 200 EMA and SMA, and here's one right here. We have resistance at the 200, resistance at the 200, triple top breakout, pull back to the 200, pull back to the 200, where the body is, strong buy with a hammer. This can probably run up to 191 and then pull back. And that's snow. PANW off the 200 EMA, triple bottom, affirm, just one right after another, off the 200 EMA, affirm, Oxy, trying to break the 63 EMA, target 200 EMA for a swing. Morgan Stanley, way overbought. I wouldn't jump in it. Home Depot, bounced off the 200 SMA twice. Breakout. The 200 SMA and EMA is essential for getting the reversals and swinging. Target, that's way above probably the 200. No, still underbought. We had a triple bottom, quad bottom. 1, 2, 3, 4. You might make a little bit more. Triple bottom in this here after the snake. Easily coming back up here with a new CEO, but you know, Target's got a bad reputation. But traders have a short memory span too. They don't give a crap. Coin off the 200 EMA, SMA, triple bottom. Nike, way oversold. If I was going long in a stock, I'd buy Nike, and I wouldn't worry about it. Not here, I mean, but I'd buy it at a support level, and I'd go long for a couple years. Meta hasn't reached the 200 in 3 years. Got a triple bottom reversal on Meta. Simple as that. Randy, are you in here? Randy said something over the weekend that caught my ears. Let me get back. I'll be right back. And this is the perfect time to be thinking that way. Is you can almost, after, God darn it. I'm getting ready to make a ton of money. I regret it every time I don't get in on these pullbacks off the 200 EMA and SMA. I'd be filthy rich if all I did was just buy at that point and hold on and wait. I'd be filthy rich because I've called it 4 times in the past 4 years. And they bounced up tremendously off the 200 EMA and SMA on the yearly and weekly time frame. So this is a time where you can just pick and choose, not even have to worry about technical indicators. If it hits the 200 EMA and SMA, either one of them, 9 out of 10 chances it's going to reverse. And then you got to tune in with the market conditions. Right now, you got Wall Street hating Trump because he wants to put a stop to this human trafficking. The cartel made billions trafficking these people to Europe. 20 million people in Europe without legal process of getting in there. And about 12, 15 here the past 4 years. And the cartel made billions, millions, hundreds of millions, plus shipping drugs. So that's the only thing that makes me worry. We got a symmetrical flag on Meta. Meta's double topping. I called that bottom this morning. So we bounced off the 50 on the daily, and we're breaking the 200. What's that blue line? Oh, it's the cloud. That's the 9. And the 21. Today's losers that I think might bounce. Hims is a no-go. General Motors sucks. Nike, I'd put on watch. Apple. Apple almost said an alert. We got a gap. Got a gap support on Apple here. Watch, see what Apple does off this support line. This is on the daily. So I'm going to put this line right here. Let's go back to Randy. When you're sitting at the 200, you could almost pick and choose your favorite tickers, and you don't even have to look at the chart. As long as you know you hit that 200 EMA and SMA. Now, what would cause it to go below it would be a 911 or assassination of a president, or maybe a smart bomb going off. Maybe a war with Iran. But, you have to be in the now. I'm very bullish in the market. I'm a lot more bullish now that we hit the 200 than I was when stocks were up 5 or 6, 700% in a year. So now's the perfect time. Randy said it. No, things ain't going right. I might have to go back to my old ways. I used to just be able to look at a chart and know if I can buy it or not. Now's the time to be looking like that. Your favorite tickers. Mine's Tesla. I called it out Friday. Tesla. This is why I'm telling you, man, if you just remember that this is going to happen again. We're going to see the 200 EMA and SMA one more time. And then we're going to see it again after that. And then we're going to keep seeing it. So I'm sitting here Friday, drew my little channel, and I said, man, we got a long-legged doji hanging out at the 200 EMA. What the hell does that mean? I'm swinging the sucker off the 200 EMA on the daily time frame with a long-legged doji, baby. I'm all choked up. 200 EMA. I'm going long. Weekly. 200 EMA and SMA. 200 EMA. 200 EMA. Inverse head and shoulders. 200 EMA, resistance, once we fell through it. Once we fell through it, 200 EMA became resistance. Triple top breakout, it broke out. It pulled back to the 200 EMA for solid support. Then it broke out again. Come back to the 200 EMA for solid support. But I'm bullish in this stock. This is going to be the leader of AI. Wall Street. Well, I'm looking for the company that's going to prolong this AI experience. That's what I'm invested in. So the next one on here would be Love, but that's overbought. Love's way overbought. I'd short this sucker. Chipotle, I called it out at 30 bucks. And Amazon almost had an alert off the 200. It could bounce here. This was my third support. And we have a double bounce off that yin yang. Could get a triple bottom, things get frantically, and go long off the 200 in time. Oracle. Weekly time frame off the 200 SMA. I can't tell you how important this idea, this support area is. To go long. Almost every one of these stocks that I watch on my watch list. Overbought Kroger. Bouncing off the 63. Still way overbought, but we're in scalping area. Snow. Off the 200 SMA. AVGO did it already. NVIDIA, I already did NVIDIA. This is the bullish stock, another survivor of AI. AMD, another survivor of AI. And we're down at a solid support. Gap play. Shopify. I got my alert set for the 200. We do have 3 black crows. This could be a reversal to the upside. This is kind of oversold. Flush out. I kind of like it in here too. Yeah, I definitely do. It's a good spot. Shopify lowers price target to 150. I'm still in my put. Cisco overbought. Overbought.
Jim, what put are you in?
What's that?
What put are you in currently?
I'm in the 6930s.
Okay, on SPX.
Yeah.
Gotcha. Okay.
And it's not going very well. I'm down $1.60 contract.
Yep. We're underneath a trend line that I had here. Let's see what happens.
You're under the trend line?
Yeah, I don't know if I fully trust the trend line that I have here, because I now see another one that we just bounced right off of. I'll post it in a second.
Yay. Well, we're starting in a downtrend.
Yeah.
And that's called a bull flag. That's a bull flag, though. We'd have to break that trend, the 50, before it becomes bearish. And we're about to do a triple top, but still, yeah, it's a bull flag.
I just posted that in the chat. These trend lines that I have kind of wedged in between right now.
I'll look at it here in a second.
Yep.
We're going to know here shortly what it wants to do. I might get more just to lower it down, get out of it with lesser loss. Magnificent, you can give me an F on this one and get away with it. You hear me? Oh yeah, that's a beauty. You drew that out perfect. Actually, you could almost call it a wedge. You take that first breakout above that channel, run it to that candle right there, and I bet you it lines up right with that too. Is that a hair? What the hell is that? Hair in my food.
Love to see this come back down to that 69.65 level. Well, here we go.
Plus, I really love that. I ain't gonna say that. I like that plumber's attitude.
Bounced off the 9 there.
Yep.
1 minute.
Yep. Out of the flag. I knew it was coming. Triple top.
Want to see a pullback, man.
You're not in it, are you?
I'm gonna put.
Uh-oh.
Yeah. As soon as I cut the put, then it'll fall.
Yep. We had a double top.
Yeah.
Harley. Ah. She looks hot today.
You fucking kidding me?
Yep, there it goes. I don't know what to do here. Oh, excuse me.
Education Coach. It's interactive learning at its finest. Tune in live.
Excuse me. PANW. Good spot for PANW for pawn Friday, even Thursday. The weekly bounced off the 200 EMA PANW with a triple bottom, so that's a pretty good idea. If you get a little pullback, and that's a support, will be off the body of that candle we had Friday. I'm going to raise it up just a little bit. 159.50. That's PANW off the 200 EMA. On daily. Google bounced off the 200 EMA at the first of the year, last year, so it's overbought. I'd almost see if we could hit the 21. So I'll set an alert on it. And that's on the weekly. 21 EMA on weekly. So when the alert pops up, it'll tell me. And that's a gap. So I'm going to set another alert, a support line. And that's a gap right there. I just now noticed that. No. And I'll type in gap on this alert. And that's gap on Google. At 306.87. CrowdStrike. It's definitely at a support level, but yeah, that's pretty nice support level, actually. Oh. PLTR new high. PLTR don't cry. We're definitely bullish. We're coming back a little bit on my SPX. Cut my losses. We extend the flag out, the bull flag out to the right. And those are your resistance, your support levels. And we could possibly hit 69.60. 10-4. And that'll probably be even for me if it gets there. I've got 3 contracts. Wish I only had one. Would have bought 5 down here at 130, 140. So the first support becomes the old resistance off the bull flag. The second support is the pivot point bouncing off the 63 on the 1 minute. And then we got 69.59.02. I don't know where that come from. We'll have to find out. They come off the bottom of the bull flag. That came off triple top breakout. 69.59.02. So that's pretty solid support for it to stay bullish. Right now you're on the 50. So that's another one. Excuse me. I'm gonna go make my cider. Dow Jones down. You have to remember the big run we had Friday. You're going to get a flat day, and we're up on a flat day, so that kind of looks good.
I'll be back.
Stay connected to the markets with Schwab Network.
Tune in 24 hours a day, 7 days a week on schwabnetwork.com.
And on all your favorite streaming services. Schwab Network.
Available anytime, anywhere, on any device for free.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Welcome back to Trading 360. I'm Marley Caden here in our Chicago headquarters. Let's head out to the New York Stock Exchange for a check on the markets. Welcome in Nicole Petalides, host of Opening Bell and the Watch List. Good morning to you, Nicole. We're about 2 hours into the day.
Well, that sucks.
It's sort of looking a little range bound this morning as we wait on some important data. But what's sticking out to you most so far this morning?
Well, I might have to lose one of my profits on my trades today.
CPI, jobs. We will be getting a lot of economic data throughout this week that everybody really wants to see. In the meantime,
It bounced off that
the market
50.
has been acting
It bounced off the previous high.
There's a lot of
Well, that was
stories
expected.
And we're coming off of Dow 50,000. On Friday, we hit the milestone and, in fact, closed above 50,000. Sometimes you don't necessarily see that.
Cleavage.
So it was an exciting day for folks.
Market's
who are
going to turn
long
around my
in
way
401ks
now.
and IRAs, and a psychological milestone at that. In the meantime, there's no doubt we've had extreme volatility, whether it's been in tech.
There's no doubt you're showing cleavage today.
Or Bitcoin. And so people are staying quite.
Man, I need some oxygen.
Things coming back, though. We had somewhat of a rebound on Friday for all of those things I just mentioned. For the most part, things have stabilized. And so now we're much in a wait-and-see mode for more earnings and economic news. As for today, Kroger got a new CEO. The Netflix
Kroger got a new CEO. That's why the pop.
Deal is now looking under some antitrust scrutiny. Also, just other names. You have Samsung and Micron in the news. You have Nvidia chips in the news. So there really is a lot of different pieces of news going on here on Wall Street. As far as sectors, I will tell you the best performing sectors of the day include tech and materials. On the downside, we're seeing some weakness here in healthcare and also consumer staples. Marley?
All right, and I want to talk about one of the big stories that I'm always fascinated by, this GLP-1 space and this development we got from last week where Hims and Hers came out and said they're making their own pill that's going to rival Wegovy. Now they are going to pull that pill from the market. Novo still moving forward with a potential lawsuit. The FDA evaluating Hims and Hers. Hims and Hers moving significantly to the downside while Novo moving higher. Can you walk us through the latest in this story?
Look, we know the battle of the GLP-1s, the semaglutide, has been hot and heavy for a couple of years now, and this year was really about the pill, especially for a new way to have this, maybe a cheaper way to have this, good for folks who maybe have a fear of injecting themselves, so it was another alternative that was exciting for the market, which really fights obesity, fights and improves your cardiovascular health. The Hims and Hers story and the Novo story, these stocks are both under some serious pressure. And Hims and Hers does a compounded version of the GLP-1. It's cheaper. At first they weren't going to do it, then they were able to do it, and Hims jumped 10%, Novo came down. Then now there's a lot of scrutiny in the last, let's say, 4 or 5 days, and including you saw Health and Human Services looking at this, trying to refer this to the DOJ. You've had also pressure from Novo and pressure from the FDA onto Hims and Hers to not make this copy. It's a compound that is similar to, probably not exact, I don't know whether or not it's exact, but the company, Hims and Hers, said after some construction conversations with stakeholders in the industry, they felt that it was appropriate to now pull that off the market. So they won't be offering that anymore. So the stock is down. Both of the stocks have been down. I mean, 1 month Novo's down 14%, 1 year down 43%. Hims is down 1 month 50%, 1 year 57%. So they're both sort of struggling. But now at this point now, you have the FDA Commissioner, Marty Makary, targeting all these mass market copycats. And so we'll continue to watch the big guys like Eli Lilly and Novo and such. But in this case, this was a loss for Hims today, as they now won't be able to offer that Wegovy pill copy in the compound. Marley.
Yeah, well, certainly Hims and Hers trading down about 25% on this news. Novo Nordisk trading about 3% higher. Nicole, we appreciate you breaking that down for us. Nicole Petalides. Now it is time for the Disruptors. George Tillis, our senior markets correspondent, here with today's company, Oracle, after getting an upgrade at D.A. Davidson. Good morning to you, George. What does D.A. Davidson and the analysts there have to say about Oracle and its future in this bullish note?
Well, I think there's a lot going on with Oracle. I mean, first off, just contextually, the stock is down since September's earnings, where I covered it during that day, and there was a 5 standard deviation move that day with the stock gapping higher. And since then, this is back in around the 10th of September. Since then, the stock has been down about 60%. So I think this is really an indication stock potentially some challenges with OpenAI, perhaps the contingent revenues that Oracle was subject to receive from OpenAI were in question. The debt levels had increased, but nonetheless, the stock price has been retracing back significantly since then. But I think now it's getting a little interesting here. A couple things, I think, in the context of OpenAI, they are pivoting as a business towards more of an advertising-based model, as well as the valuation reset, if you will, of Oracle relative to their deals with OpenAI and all the revenue they're expected to generate from that business itself. Again, I think the market had really been positioning Oracle as one way to, by proxy, short OpenAI. But right now, it's starting to look interesting, at least from a technical standpoint, and some of the analysts too are looking at a potential share shift back to OpenAI from Google Gemini, because Google Gemini had really caught up significantly in terms of their position in AI inference, as well as queries and tokenization of AI relationships. So with that said, D.A. Davidson is actually now looking at this as potentially bullish for Oracle, having pulled back significantly. They have
bullish on Oracle.
Buy rating versus neutral, $180 price target, and they're looking at the capitalization rate of Oracle.
I'm bullish on Oracle too, because we hit that moving average
forward as positive catalyst for both businesses. One of the things that OpenAI is also doing in the next week is they're going to be releasing an update to their program. And that might be also a positive catalyst alongside, like I said, the advertising revenue that they're going to be generating going forward.
All right, George, so with all of that said, we're seeing this move to the upside here on this note, up 10% for Oracle. But like you said, they've been pretty beaten down. I mean, just year to date, down about 20%. Yep. So with that setup, how would you go about structuring an example trade here?
Yeah, I think some of the analyst ratings are in context of this makes sense. If you look at the low rating on the street, it's $155 or right around that level. If you look at the midpoint levels, $275. So with that said, I do think there's something happening in terms of dispersion within the AI ecosystem. Some of the software names may be picking up traction after being sold off aggressively as of late. Oracle's been selling off aggressively for a couple months now. So I think there's momentum, at least in the short term. If you look at the price action, there's a gap in the chart going back to a low pivot point last Thursday. And there's a possibility that there's a continuation momentum up to the 20-day moving average, which is around $165. So I'm going to play this a bullish short-term swing trade. I'm basically going to buy a long call butterfly spread with 4 days to expiration. So this is again expiring on Friday. I'm going to buy. I
call this one off the 200.
Sell 165
Friday
at that 20-period moving average target. Then buy the 175 above that to tap it off. And altogether, it costs you about $2.50 a share or $250 a contract. So the whole premise behind the trade is to hit the target of 165. It's about $10 between now and expiration in 4 days. Your return is $3 for a dollar risk. So you get $750 in return for $250 of risk. If it does hit the 165, and then your max outlay is the total debit you put forth, which is $2.50 a share. So it's really a swing trade. It has to hit that target level to achieve max profit between now and Friday. But position yourself for max loss just in case things turn around the next 4 days.
All right, well, right now, even with this 10% move to the upside, trading at 157.37 for Oracle. George, we appreciate you being with us to take us through that note from D.A. Davidson and also for the example trade. That's George Tillis. Coming up next, we've got our 360 round. We'll be looking at the recent volatility in gold and silver, what to make of that volatility in the metals market, and how you could potentially play it. That's next.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights.
Come on, Jim.
Trade brilliantly with Schwab.
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's market.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for this stock. And that could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
Welcome back to Trading 360. I'm Marley Caden. It's time now for the 360 round. For that, let's bring in our panel to discuss gold and silver prices of late. Joining us now, Tom Graff, Chief Investment Officer at Facet, and Akash Doshi, the Head of Gold Strategy at State Street Investment Management. Thank you both for being with us today. Akash, let's start with you. What are your takeaways from some of this action we've seen of late? You know, we saw these record-breaking prices, and then we've seen them significantly pull back. Today, we're coming back some. You know, what are the drivers behind this erratic behavior we're seeing in metals?
Thanks, Marley. So January was a very historic month. At one point, you had silver prices up 60%, gold prices up 30%. That just really is unsustainable. On January 30th, we saw a big liquidation, some profit taking. Some of it had to do with dealer hedge flows. Some of it had to do with month-end rebalancing. And you just had a flush out in the market. That continued in early February, but now the markets have stabilized, particularly for gold. You're seeing dip buying at $4,500 to $4,700 an ounce. Today, as we speak, the spot market is back above $5,000 an ounce. Silver prices are back above $80 an ounce and rallying today. And what I think ultimately happened is that this was more of a technical correction. The markets were overbought, overextended, but they're not necessarily overowned. And I think that's a key difference. And I think most of the thematic reasons of precious metals investment that took shape in 2025 are going to continue in 2026, and that structural theme is still intact.
Tom, I'd love to get your thoughts there on that. They're overbought but not overowned, particularly because you made a comment that really stuck out to me about silver, that the swings that we're seeing point to some bubble-like behavior. You know, what are your thoughts there?
Yeah, I have a hard time, with silver specifically, I have a hard time looking at an asset that nearly triples in price in a single year and then drops 40% and think there's something fundamental going on.
I've been trading 21 years. I've never seen silver pop. Never. I sold mine. I mean, I had a little bit of silver here in my box, man. I sold it all. 300% in a short period of time, that's just very unusual. I contribute it to the big AI jump and all the computers that are being made. But I've never seen silver run. I have gold a couple times during Obama and during Biden. And now during Trump. But the market was thinking things were bad were going to happen, or at least they were covering their asses in a way. Because Obama had many big, huge pullbacks. Because, you know, we just weren't used to printing so much money. And then now we have a $37 trillion debt because of it. And it's not all his fault. But Bush started the shit with the stimulus package after 9/11.
But the gold and silver run is almost like a frenzy. Because I was watching these videos of these people in China or Asia, I don't know what country it was, and they're all out there like rushing to the stores to buy gold and silver, you know, crazy.
Yeah.
Mad rush, like rush of everyone trying to buy it.
It's like they were doing in New York on them YouTube channels. one guy is just throwing bars of gold and silver out to people in the street because he was up like $35 million in a year with all the gold that he invested, money he invested in gold. And now it's dipped on down a little bit, but yeah, even YouTube was pumping it. People wearing their gold chains, they were showing them off. It's kind of unusual, but I'd never seen silver run up 300% in 1 year in a short period of time. Never. It had to have been a pump.
Yeah, I watched this video about the deal with these metals is that you buy them at the high end price, and then when you go to sell them, then the dealer cuts off like a huge chunk when you go to sell it.
Yep.
They don't give you the price that it's going for. They can undercut it by 40% in cases.
They give you the price what it's going at, and then cut it so they can make profit to go to that price. No matter, if it's down 50%, you're going to be paying less than 50% what you paid for it if you bought it at the high. A lot, like you said. Then they're going to undercut it.
Retail price versus manufacturer's price. It's the way business is.
Yep. Yeah.
No secret.
Yep.
Hey Jim,
yeah.
Are you getting on the Oracle trade? Bounce of the 200 moving average on Oracle?
I'm in some stocks right now, but I want to wait for another pullback, and retest the 200, or at least get a little higher high. It's called a dead cat bounce. When you have it, and we could have already had it because we hit the 200. We could have already had it once, but I want to see if we can retest it just one more time before I go heavy. Right now I'm in Tesla, I'm in Amazon.
Jim, what about for the swing trade on this Oracle deal? Think it'll keep going after it bounces up to 209 for a while? The swing trade one?
Right now, we bounced off the 200 on the weekly. And we once before bounced off the 200 EMA on the weekly. So I'm saying we're going to have to break 157, 57, 57, 57, 57 to run up to 175. And that's a shoulder line of a Head and Shoulders. And we have a touch right there. So if we break the 157, 57, 57, 57, I'm pretty sure we're going to see 175 on Oracle and then have a hard resistance. And the neckline to a new Head and Shoulders is up at the 63 at $200. I would like even for it to retest today's low to might go long in it. But they're bullish on it. Maybe
sure drop down.
Maybe right around 148 or 150. Set an alert around 150.
Man, it sure went straight down for that 200 on the weekly, huh?
Yeah, it hit the 200 on the weekly. Is that what you're saying?
Yeah, it went down for it.
Yep. But I've seen this retest over and over and over again off the 200. And I would go long then for sure. What was I going to type in here? 150. I'll just raise that up just a little bit. Let me put my 150.25. I also heard something that I want to remind everybody. There's called, what do they call it? Like Bitcoin. Once it hit $100,000, traders started getting out of their position. It's just, I forget what they call that number. It's like an even number, 50 if it jumped to 50, or if it jumped to 40 or 60, but 100 is that magical threshold number. I heard that this morning. I'm trying to think of the word you say, but I can't think of it right now.
Another one that did a nice turnaround was UPS. I was checking on it this morning.
UPS. I'm going to go straight to the weekly. UPS got a little bit oversold, didn't it?
Yeah. And it bounced off, it bounced off the 200?
Yeah, 130.93. Yeah, there's a nice little yin yang right there at 130.93, 135, 134.64. 130 for sure for the 200 EMA. Now, I think I called this out down here when it was down here earlier, a ways back, because I forgot what I saw. Let me pull up. I think it was the monthly candlestick. Yeah, it was definitely the monthly candlestick. We had a triple bottom with a quad wick. You can see it right there. Quad bottom, if you count that wick, triple bottom. Now we're hitting the 200. See, even on the monthly time frame, it's telling you we're nearing a resistance that we have to try to break. It's a hard resistance, the 119 area.
Mm-hmm.
And you can see it. You can see that hard resistance over here. That's called a head and shoulders. That's on the monthly candlesticks. So that was way oversold. Then on the yearly, monthly, 20 yearly candlestick, we got a tweezer bottom with 4 black crows. So that's another buy signal. The tweezer bottom. See what happened when we had a tweezer bottom last time? We had 3 white soldiers. Now we got 4 black crows off the 63. This is a day for Randy to really be getting down and looking at his old trading way he used to trade.
Nice living. Yeah. and took a beating because of the deal with Amazon. UPS.
Let me see here. I still, oh, my tea. I got to get my tea going. My cider. Bears have control on Apple. Oracle breaking out. Oh. Baja Principal, Grand, and Tulum. Premium Superior Ocean Front. May 26th to May 22nd to the 25th. I'm thinking about incentivizing my YouTube channel. If anybody knows how to do that and wants to help me, I'd appreciate it. I know if I get in there, I'll probably screw it up somehow. Oracle broke 157.57.57.57. Resistance. Jimmy called it. Oh, I'll be right back. Probably have to take a. I sold 101 of these things. I got 2 left. At 150, I sold 1. PLTR new high. PLTR is making me money. Still ain't got my sugar yet. Broke head and shoulders on /yes.
Absolutely. I mean, the baby and the bathwater is a, and then not to mention Microsoft got hit hard after their earnings. Oracle, we know, got left for dead in some of this. Even Apple took a little hit on some of this news. So I think all these softwares, that this is what has held the market back the last few weeks. The Dow rallied, but other parts of the market were not rallying. It was the equal weight. Now, this part of the overall information technology sector is taking this market back up, but you're starting to get a real flow of positive comments from different analysts picking out their favorite names among this big group that got sold off en masse during earnings season. So I think when you look at these names, and you can go through each one that has still tons of opportunity, and what you're saying is, now I agree, there's going to be winners and losers. in 2026 in terms of software, and everyone might not do well, but they sold off everybody. There was no one safe from these sell-offs, and some of it was the CapEx spending, right? They really reacted negatively to the CapEx spending. All of a sudden, out of nowhere, they suddenly, the markets didn't like the CapEx spending. Now, they're at least starting to say, well, you've gone too far with some of these names, and now the valuations are starting to come into play. So I think that this is really good, positive notes from analysts. I love the fact that, someone downgraded Microsoft at these levels, and they're wishy-washy on Oracle. These names have all been absolutely destroyed, and they're right in the thick of the AI trade. So I think they're all going to do, well, I shouldn't say all, but a lot of them are going to do extremely well. But this competition for who's going to be the number one AI, everyone left Gemini out of the discussion early. Now they're clearly at the top. Everyone's chasing. Now, it turns out slow to get into the game, slow to advance, but now Google Alphabet seems like they're in the top spot, Diane. This is fun to watch play out because it's like one of those, it's like being at a sporting event and seeing the donut race, right? One guy pulls ahead, then the next guy pulls ahead. But, Google Alphabet and Gemini clearly in the lead right now. All the rest fighting for those, the winners and losers space here. It's going to be fun to watch.
That's a good point. That in terms of the horse race that we may be watching here. But so, Tom, I'm curious to know your thought on this. Wedbush says, okay, we're adding ServiceNow and Salesforce. You got a little bit of a reaction, positive. Initially in the pre-market, it didn't look like it was going to matter at all. Salesforce up 1%. You got ServiceNow up almost 2%. It's going to take a lot to really move the needle on these shares for both of these companies. What's your thought on this Wedbush positioning now?
Yeah, I think it's more of a relief rally. Yeah, they're picking a bottom, but if you saw what ServiceNow has done in CRM and Adobe and some of these other names, as Kevin mentioned, they just have been destroyed. So it's not that difficult sticking out your neck when these stocks are down, 25, 30, 35, 50%. From recent highs. You saw some of the cybersecurity names get dragged into this. So I think this is more of a call on valuation that, hey, AI is not going to take away all parts of their business. If you looked at ServiceNow's last earnings event, that was a pretty good report. But then you see what comes out of Anthropic with Claude and some of these other AI agents, the ability and what they're able to do. What are sales growth numbers going to look forward coming into the end of 2026 into 2027? Are they going to, lose a bunch of their business because maybe, these companies don't have to outlay so much capital if they're subscribing to their products when they can do it maybe in-house using an AI agent that they've developed or another company has developed. So, yeah, I don't think this story's over by any stretch of the imagination, but at the same time, valuations were getting pretty low on some of the software companies.
Okay, great points there, guys. Let's put a pin in it. We got bull versus bear coming up. The guys will get their example trades.
Follow the leaders, what they do.
We'll be tuning in for its results ahead of the bell tomorrow. We've got more.
I admit we were in a bubble. We were way overbought, but I wouldn't call it a bubble. I'd call it just way overextended and still be bullish on the stock, like Apple, Microsoft, Tesla, MU, SMCI. And where's SMCI after that sell-off? Remember that had that big pump there? And we're right back down to support again at 32.77. PLTR is a no-brainer. It had excellent earnings. Excellent earnings. Google had excellent earnings. Tesla had more hype, but it is the number one leading car seller in EVs. I mean, it's way oversold. We got 450 target if you're in Tesla. Eventually, you'll hit that 450 easily. And it might even hit the neckline, so let's bring that neckline down a little farther. Could hit a little bit lower. Says big head and shoulders. We got, yeah. Let's look at the daily first. Yeah, its head and shoulders is a lot higher. So I couldn't use that. We've got a gap right in there. So it'd have to be the 63. Would be your next resistance. 431.40. And I'm going to put this order at the mark at or above. I think that's where I want to take it. 430, 431. And I think we can get back to 475 long. If you bought it down there off the 200 EMA Friday, Thursday. And that had a real buy signal. You had a triple bottom off the 200 EMA with a long leg doji back up into the cloud, which is the 9 and the 21, and run it up to the 63 and see if it wants to retest the 21 and break to the 50. Tesla. But if we get one more pullback, I'll be going very long in a lot of stocks.
That is just
Here's Spotify.
Extremely healthy, doing extremely well. The valuations, that's really not my place to figure out what the right valuation is. But you know, the fact that they came in and literally made a better mousetrap over iTunes and Apple Music and all these other streamers, it's incredible what they've done, and they just keep getting better. And I think AI, that may hurt some companies, is actually going to help Spotify, because it'll not only streamline some of their operations, but more choices, and the services that they give will be more efficient. So I think Spotify's in a really good spot here. I don't know if the stock's going up or down, obviously, but the company is the leader in streaming music.
Okay, ooh, you left me with questions on which way you're going to go in terms of the bull versus bear take. Tom, your thoughts before we get into example trades.
Yeah, pretty good growth rate, but Kevin mentioned something key, and I think this is why the stocks pulled back so significantly, and if you overlay it with a chart of Netflix, they look similar, is that revenue per user. They're outlaying a bunch of capital. They've got, the different areas within their business. It's just not music streaming anymore, podcasts, and some other items in there. They grew premium subscribers 12% last quarter, 11% on the top line, over 700 million users, monthly active users across their platform. So I think it's more of a valuation thing where, hey, they're still growing at a decent clip. The revenue per user, if that starts to come down, if margins get tapped at all, that would be a concern, because they're still trading on a forward PE basis of about 40 times, trailing over 53 on trailing PE. So the valuation's still elevated at this point, even though got decent growth rates, and they're obviously they've got the best algorithm. They're sticky. You just hope that there's no churn and they keep on hitting their growth numbers. But maybe this has just been a reset in the stock price due to the high valuations it's always had.
Okay, all right, let's get into the example trades. Kevin, let's start out with yours. What's your approach today?
So my goal for this trade was to give myself, remember, when a stock sells off from 785 to 405, now it's trading around just under 420. The one thing you don't want to be is a bug on the windshield if it starts to move back to the upside. I don't know what it's going to do, but at least that's what I'm trying to prepare myself for. So what I looked at is an unbalanced butterfly that gave myself some duration on this trade. I went out to the March 20th expiration, bought the 420 call, so just a couple dollars out of the money, actually even less. Stock's rallied now, it's just a couple pennies out of the money. Bought the 420, sold 2 of the 470 calls, so a $50 wide call vertical, and then sold 2 of the 70s, bought 1 of the 480s, so a $50 wide call vertical financed by a $10 wide call vertical. Put that in for about $15.50, trading over $16 now, so it's trading a little higher, Tom. This one, you know, once you've assumed a bullish posture, this butterfly, it's in the butterfly family, wouldn't limit you if it goes through your short strike and advances beyond. I didn't want to have it go towards the short strike and come all the way back down. So the unbalanced butterfly allows you to keep some of those profits if it were to go even higher, Tom.
March monthly options here, so 39 days to expiration on this, so not a pure earnings play, so you've got some duration in this position that Kevin brought us. Buying 1 of the at the money 420 strike calls, selling 2 of the 470 calls, and then buying 1 of the 480 calls. So as Kevin mentioned, a bullish $50 wide call vertical, offsetting some of the cost by selling that $10 wide call vertical with that same short common strike where you sold 2 options at the 470 line. Broken wing or unbalanced call butterfly, paying roughly. The debit you pay is going to be a risk. So if you pay $1,550 per spread, it's trading over 16, as Kevin mentioned, because the stock's moved higher. Stock was down at $412 earlier, so it moves higher, so that expands the price of this. But you can see here from the risk profile, it takes your break even up to 435.50 to the upside, maybe 436.
Tesla going
a little bit more. That's less than 3.5% above the current share price of $420 in there. So you don't need a massive move to the upside. And as Kevin mentioned, you can see here, your profitability goes down after you hit that 470 strike where you're short 2 options. But even above the 480 strike, it's more than a double in profitability compared to the amount of risk that you have in here. Now, we always talk about butterflies. It takes a while for those to expand. As you get closer to expiration is where you're going to see the real expansion. But if you get a move up at or near 470 or so, that's what you're looking for. It can expand relatively quickly just due to the price action of the shares. The option market pricing in about plus or minus $39 move either way. So that getting close to that 470 strike as far as the 1 standard deviation. So Kevin, I looked at something because, you know, it might be oversold at this point. We're seeing a little bit of volatility here today. I looked at something a little bit more passive where I don't need a move in my direction to take a bearish stance on this as an example trade if you're a little bit more neutral to bearish. So I went out to the February 20th monthly cycle, so just 11 days to expiration on this one. Also not a pure earnings play, got a little bit of duration. Where I'm going to sell an out of the money call vertical for a bearish stance, giving myself better probabilities of success on this one. Selling the 455 strike call, it's out of the money by about $35 to the upside, almost that 1 standard deviation. And then buying the 465 strike call, so a short $10 wide, neutral to bearish call vertical. Here you're going to collect roughly, and this is where it was trading earlier, about 210, probably trading closer to 240, 250 right now. So you can collect a little bit more credit, and that takes your break even up. But if you collect that 210 credit, you got $790 of risk, but that's all the way above the 465 strike, and it takes your break even.
Come on, baby.
On this one. 457.10 to the upside if you collect a 210 credit, Kev. So a little bit more passive, but higher probability of success on this neutral to bearish call vertical.
11 days till expiration and a 75% probability of finishing out of the money. This is a trade that is risk-defined in nature, right? It's a $10 spread that you're collecting. It looks like it's trading around $2.40 now. The risk would be the difference between $10 and whatever credit you took in. So if it's $2.40 where it's trading, it's about $7.60 would be the risk. It's high probability, it's collecting theta, and it's risk defined, Tom. It's what we talk about when we talk about a high probability vertical, either on the call side or the put side.
Yep, and different durations on this also, Diane. So yeah, mine's a little bit more shorter term, but I think the key is they're both risk defined. So you know exactly what your downside is going into either the bullish or the bearish position.
All right, risk defined, there we have it. We've got cash tags coming up, guys. The team from Blackfolio will be along with new sentiment data on Coca-Cola. Keep it right here on Schwab Network Fast Market. Back after this break.
Hi.
Hi.
I'm Jane.
Hello.
I'm his mom.
I'm his mother. Sometimes, do you know how to cook? Same goes for where you invest. Level up and invest smart at Schwab.
I'm Sam Vardas,
I'm his
live from the New
mother.
York Stock Exchange. When the market moves, we're on it, getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader?
Yes,
Our active
I'm very
trading
active.
webcasts are designed to help you develop a deeper understanding of technical analysis.
Come on,
options,
Amazon.
futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
SPX is at the 63
No politics,
major
no spin,
support level.
Just the market from open to close and
And I'm
beyond.
only at 80
Tune in
cents.
24/7, any
I'm
screen,
way out of the money.
Anywhere at schwabnetwork.com.
Whether you're an experienced investor or just getting started,
Oh, God. Technical analysis with Washboardjim.
like folio. All right, Landon. So when we look at the shares of Coca-Cola versus PepsiCo, it's, I want to say it's eating its
Prison guys up.
better, connectivity, something about beverages. You know where I'm going. Coca-Cola's been performing better than Pepsi, but Pepsi's been playing catch up this year. What does sentiment look like for your latest data?
Is marking down chips 15%.
If you would have asked me this in maybe
They had too many
August or
complaints.
September, we would have been pretty high on Coca-Cola. They had a very strong run up in pretty much all of their data, especially some of their the emerging stuff, not the non-carbonated soft drinks like all the other brands that they have. Those have really been, the non-core brands, those have really been doing well as of, like I said, August, September, even October. But the data is starting to pull back, and I think that the market is just sort of catching up to this. And now,
I didn't watch the Super Bowl. Was it a good game?
Trend from 67 to 73 all year. And then just a month ago, it broke out of that. It ran up.
I refuse to watch any sports.
Now, slight pull.
I just don't care anymore. I haven't watched a baseball game in 5 years. And that was my #1 game. Then I always watch football, every Sunday. I got rid of my TV and I use Sunday as guitar lesson day. And just relaxing. Last Super Bowl game I watched, I think it was, it's been a long time. Long. It was way before this politically correctness. I just don't get off on no more. Used to be. I think resistance on Pepsi to break is at 166.53. But Pepsi, make it 55. Oh, yeah. Okay, not bad. It hit my hard resistance, IWM. I can handle it. Just don't talk about my small Peter. Pepsi, it's about ready to break. But is it going to break? They had so many complaints about chip prices. If I wanted to buy some Doritos, I'm going to pay $6.50 a bag. I ain't paying $6.50 a bag for some frickin' chips. Plus, I want to get healthier, so I cut them out of my diet. I've lost 5 pounds. I don't need to eat chips. I'll eat a ghetto taco, though. I'm at 80 cents on my puts. Woo! On the other hand, well, we see okay. AMC back down again. A little run it had Friday. GME hit my resistance Friday and pulled back. $20. Let's look at it a little bigger. Let me see. 20-day 1 hour. Yeah, $20. Anywhere around 20 is a buy. On GME. I wouldn't buy it here. I wouldn't chase it at resistance. What do you think I am, a fool? Yeah. I do, Jim. I think you're a jerk.
Philippines.
Did you say you second that? I heard what you said. Oh, there's my girlfriend. Oh, yeah. It's a coming on down. Someone wrote something nice about me for once. I'm not going to share the name, but I'm going to share what was said. Nobody in here talks nice about me.
Nothing but good things to say about Jim.
Michelle's never said a nice thing about me at all. Shut the hell up. Chick. I'd give you a wedgie right now if you were around. Oh, I'd catch you. I'd place a trap. Lay out a big old fat joint on a table. Woo! Are you talking about Michelle? Whoa. Sorry about that, honey. That was a little bit too much. That's because a man like Jim doesn't come in here and talk a big game, talk big shit, or pretend like he's more important than his existence would dictate. Jim is the type of cat that just gently and humbly drops knowledge and then disappears back into the cornfield. Be like Jim. That's because a man like Jim doesn't come in here and talk big game. Nor does he talk big shit. pretend to be more important than his existence. More people need to be like Jim. Jim's the kind of cat that just gently and humbly drops a little knowledge, then disappears back in the old cornfield. Be more like Jim, there would be no wars. Be more like Jim, and the women would be safe. Jim makes his bed after he gets up in the morning, and he makes a cup of coffee. Cooks 2 eggs in an iron skillet, smashed with some cheddar cheese. Then he jumps in the shower. It takes about an hour. That's Jim. More like Jim. Thank you very much.
Bravo, Jim. Bravo. Bravo. Jim, can you play AMC's Going Down again?
Did you say marvelous?
Oh, that was wonderful, Jim. You know, I was wondering if you can play AMC is Going Down again.
It is. Why is it going down?
I don't know. I just heard you say that before, or
AMC,
something. It reminds me of a song.
AMC had a little pump Friday.
Just makes for a good song title. AMC is Going Down again.
Oh, I might write one about that, and I'll mention Dan Ives. I messaged Dan. I said, Dan Ives, what the hell are you doing calling out AMC? And I just messaged him just now, and I said, don't be pumping Microsoft either until you have a conversation with Bill Gates and how he tried to drug his wife. SPX broke the 200. And we're at 70 cents. That ain't no good. It's no good. I'm just gonna have to take the loss, I think. AMD's coming to the 63 or the 263. Let's see what this is here. The 200 SMA. I still ain't made my cider tea. I'm gonna do it now. Okay, we're coming to the 200 on PLCR. I got 266, 25, 24, 26 on IWM, the 63 EMA. SPY, we got the 200 coming down. EMA, we just hit support on the SPX. The 200 is at 69, 60, 73, and the QQQ. I'm aiming for the 200 on the QQQ, SPY, and the SPX. And we are at a support right now on the SPX. We're at $1 on the call. Back to 75. The video.
In technology, obviously the push and pull, we've got some concerns around some companies like Micron, for instance, with the competition coming from Samsung.
Okay, and so I think a good place to start there is with one of the biggest names in the broader tech world, which is Microsoft. Obviously has
The turtleneck twins.
We saw a substantial repricing following its quarterly update
No
a few
cleavage.
weeks ago now, but Melius also with a downgrade today to hold from buy. So, I mean, taking on a more neutral stance, but overall, Street still really likes this name if you take like the broad average of conviction. But walk us through this note here, because I do think that the business model that has kept Microsoft really as a leader in tech for so long is being challenged a bit by this note today out of Melius.
Absolutely, and I think it's a bit of a head scratcher as to why we're seeing shares up so considerably off the back of a downgrade like this from Melius, particularly because of the price action we saw post Stifel, which also had a similar move just in the last week or so. But the positive catalyst, Jenny, here might actually be this note out from Morgan Stanley, which does see opportunities in this sell-off that we've seen, because Microsoft has really been thrown in that software bucket along with the rest, really seeing that sell-off accelerating in recent weeks. And they basically say that they think the valuations have created a buying opportunity for some of these names, and are talking about how they have become attractive entry points to perhaps get into some of these companies. They've named Microsoft along with Intuit, Salesforce, ServiceNow. I'm going to be talking about some of those in a little while, but also Shopify, Cloudflare, and Palo Alto. But with Microsoft, this has really been described as a quote, a clear participant in the most innovative, in the most important innovation cycle. So they are still very positive, to your point, on this name. Particularly because of, as I said, how the PE multiples for software have declined very much from, I think, 13 times or so late last year to about 20 times currently. That was according to a note out from Goldman just the other day. But then we had this Melius downgrade, to your point. They're cutting the stock from buy to hold now, so going onto the sidelines here. They're worried about the CapEx spending in some of its products. I mean, we very much saw the reaction in the stock post-earnings. This was on a lot of those worries. They've lowered
Wish they'd get over that.
30, Jenny, from 6.
They're so full of shit.
That's a considerable leg lower. They say that Satya has lost the AI narrative. So the analyst sees a good chance.
You know, I was saying this.
Cash flow falls short of estimate.
I was saying the same stuff that they're saying now, that they've spent way too much money in AI back when they started spending that money in AI. So that's old news to me. They just can't, they just don't. Some companies spent too much, but if you're going to compete, you're going to end up, if you don't compete, you're going to end up like PayPal. I owned a picture frame shop. So I bought a picture frame shop from a lady that was about 15 grand in debt. And she was getting old. And I walked in there and did my internship for college. I told her, I said, hey, you don't have to pay me a dime, as long as I can come in here and do a little bit of work and get this internship from my college so I can get my diploma in business management. And she said, I'll pay you. And then about a couple of months into that, I said, I know you worry a lot about your debt. Let me just take it over. Let me take over your debt. You sign the company over to me, and you can retire. You're losing your eyesight. You got to have good eyes to do this business, and you can't see. You're losing your eyesight, so let's do it. And she thought about it, and she said, so I bought it, just outright. Didn't pay her a dime. I told her I'd pay off her debt. And I made arrangements with all of her suppliers. And I told them I'm going to take over the business and I'm going to take care of your debt, and I'll have it paid off in a couple of years as I go through college and get my diploma. And he said, okay, I guess, it's better being stuck with it. So I paid off the debt, and I built the business up. And I would go down to the bar down the street and have a beer or two after I work, and I'd always pull out this wad of money. And girls would start coming up to me, and there's a biker bar. And I won't go into that. But they always thought I had a lot of money, and I never really had a lot of money. I just take what I make in the day, put it in my pocket, go down and have a beer, and then go deposit it in the bank. But I never had a problem getting girls, that's for sure. In Sedalia, Missouri. But that was a fun time of my life. And back then, I got audited twice under Bill Clinton's watch. He increased the IRS like Biden did by 30%. They went after the small cats, and they didn't go after the fat cats. Same thing with Biden. He said he wasn't going to go after us, but he did. We got a triple top. I talked about the triple top in the video as a resistance level, about how people like to pump the triple top, and 8 out of 10 times it will not break. And then it comes back up 4th time. The odds of it coming up the 4th time is a lot higher than it is for a triple top to break. Because triple top is a bearish pattern. That's GME. And I'm long in Amazon. It kind of pulled back on me today. I'm a little worried about it. It hit my 3rd support, so I just had to do it. Retested Friday. We got higher lows. Targets to hit this here. And China warning hampers budding stock. What? China? China warning hampers budding stock. What's a budding? Budding stock market rally, but helps gold. Pay attention to historic Takachi win. Oh, is this a pattern? God. What the hell? Chikati. Oh, indicators. VUD indicator. What's a VUD indicator? VUD. VUD. I can't even find it. Videos. VUD. That says video. VUD indicator. VUD indicator. Stock market analyst SPY VUD indicator. VUD. No. No VUD. Oh, it's that weird dude. China hampering the budding stock market. Well, I got to learn about the VUD indicator. Never heard of it. You're shitting me. Yeah, I've got a trend line right on that 69, 69, 41. We're squeezing again. We got a symmetrical flag on SPX. We could come down and do a double bottom. Or a head and shoulders.
With each other has been broken. Now you could draw this white trend line going across the
Spot.
highs here. That one is
Spot looks way oversold.
So a sharp push to the downside, and one that does not seem to be getting too terribly much better as we approach this earnings event here. So when we see our moving averages, our 5-day EMA here in blue, that's our weekly EMA. That comes in near about 436. Just beyond that, our monthly EMA in teal, 21-day, comes in around 490. So RSI is quite low, continuing to trend downward, remaining in the oversold area. But as we always say, that earnings could be a significant catalyst that could provide a lift to shares or even a further decline here. So we'll have to wait and see for that one and try to make our assessments after this report comes out. So now we can also see when we look at our
oh yeah, Spotify's way oversold.
Accumulation of trading activity down here at these lows, mostly centered around 375 or excuse me 407 to 425 or so, roughly around that area. We also have another node here around 500 or so, so that's another area to watch out for to the upside. Notice heavy activity though at these lows. High volume signifies high conviction typically.
Okay, and so as we now think through trading this name here, obviously today experiencing some modest weakness, but we do of course have earnings that could obviously rewrite the trend. I mean, that's sort of how the last earnings report went. So with all that in mind, as you think through trading this name here for example purposes, walk us through your thinking.
The analyst coverage has not been very good in the shorter term. Even while they have a longer term bullish outlook, they're looking for guidance to be perhaps not as great as it could be in this report. So if we were to look at one example trade idea, this one would be looking at March 20th, that 39 days out expiration here, about a plus or minus 14.7% move within our yellow box here. So this trade would be looking for a neutral to bearish play, kind of looking for the upper edge of that box near that 480, 470 level. So -1, March 20th, 470, 480, call vertical at a 250 net credit here. So a neutral to bearish play, as we said. Max profit would be your credit received, that $250 credit. Max loss, $750. So that 1 to 3 risk to reward type of ratio that commonly traders kind of use as a starting point for trading ideas here. Break even, 472.50. 150, about a 12.5% to the upside. The expected move, not really too much bigger than that, but it is within the range, 14.5%. So this would be a trade where the probability would be more in your favor here. Nothing's a guarantee, of course, but this would be a trade looking for mostly price to stay within that expected range boundary.
Okay, so now as we look at Datadog, which has obviously fallen victim to a lot of the pullback we've seen in the broader software world, Datadog no exception here. I mean, we pulled back pretty substantially this year, but maybe, you know, earnings could always rewrite, again, for overall price performance and recent trend. What are you seeing here from a technical standpoint?
Yeah, a lot of disruption in these tech names here. From AI, it seems like. If you watched the Super Bowl last night, there was quite a lot of AI advertising.
Far too much AI advertisement.
Exactly. And so, I mean, it's kind of just like the sign of the times that this is how big of a disruptor this is for this particular industry, especially here. So Datadog retreating off of those highs, 201.69 here, down about 44% from that point. So a rough decline here as well. If we were to backtrack a little bit and look at some of our horizontal levels, 113 stands out. That was our red line here. That was around where we hit some notable low points. That's around where we're struggling to hang on right now. We also have 103, our green line here. That represented some highs and lows, as well as this gap here near 92. So some key areas to be on the lookout for to the downside. If we were to start moving to the upside again, 139 would represent filling a small gap that we saw here a bit before this earnings event. So a couple weeks ago, that would be one area to also be on the lookout for. When we look at our moving averages, these are showing that the decline is still in force. We're not seeing any shift in trend really before we head into this earnings event. We are very close to our 5-day EMA in dark blue there. 115 is roughly where we're at with that one, a shorter term boundary. To the upside, additionally, our monthly 21-day EMA in teal, near about 125. One thing that did stand out to me a bit, we are seeing some bullish divergence. RSI, despite re-entering that oversold area, is actually making a higher closing reading than price was here. So I do want to say with a grain of salt, though, we are heading into earnings where momentum calms down somewhat here, but it could be worse in terms of that outlook there. So now we look at our volume profile study. The notable areas of heavy trading closest to where we are now are around 100 to 108. That's where we touched on and bounced. We're in the thick of another node here near about 114 to 120. Then our point of control comes in near 138. So those are the standout trading levels.
Okay, and so now as we do consider all of this and, you know, think through an example trade here, we are up 1.3%. We've seen some very mixed reactions to anything with this, of course, like cybersecurity exposure on the back of their earnings, but considering now trading this name for example purposes, walk us through your thinking.
Yeah, again, kind of an iffy outlook for this whole sector here. So a bit of a more neutral trade in general here. Our last trade was more neutral to bearish, but this is focusing on that same March 20th expiration that's 39 days out. So we see here our yellow line, our yellow box rather, encompassing this area about plus or minus 21.6%. Notice our upper boundary lines up with two of our moving averages as well as our gap. Meanwhile, our lower boundary lines up with our volume area. And
spot looks really oversold.
So that's kind of the thinking behind the boundaries for this trade. Anyway, the trade in question, -1 March 20th, 140, 145, 90, 85, iron condor at a 150 credit. So we're selling a call spread and selling a put spread at the same time here. So in this case, 150, the credit received, that's our max profit. Our max loss is about 350 in this case here. So not quite that 1-to-4 risk reward ratio, but still, you know, a decent expectation here for the outlook in this trade. Our break evens, 88.50 and 140.150, are about 22 and 24% to the downside and upside.
Oh shit!
Here,
I'm liking spot
33.1%, so a bit beyond those areas, but still, this trade would be you'd need a bigger than expected move here to start really approaching that max loss area for this one.
Yeah, and so this name, again, having a pretty nice pop, at least start off this week. We'll have to see, though, if earnings can pass the very critical and difficult test right now, which is being held by, I mean, just the post-earnings performance we've seen from a lot of these software names. So appreciate it to Rick Ducat, our chart master, for helping us break down the technicals and some key example trades in two names with earnings still ahead. But coming up next, we'll discuss today the pretty blistering move to the downside that we are seeing in hims and hers following
200 EMA on spot, man. This is a nice spot.
As well as cat drugs now facing some scrutiny.
It's fun. Let me repeat that one more time. Spot. It's at a nice spot. Off the 200 EMA. For I am Washboardjim. Woo! Damn, Jim. You're on top of shit. Spot. Let me say I was a spot. What'd I say? Spot at the 200. I can't remember what I just said, but it was a damn good one. Hit the spot. Spot. Hit the spot at the 200 EMA. We're at 106. IWM, I got 97 tomorrow, that 267 strike. Spotify's been around for a while. Three years. $10. Hey, hey, hey. There she goes. What the hell, Jim? Spotify saved your life? Oh, that's good news. That might be a clue. Is it tomorrow? What am I thinking here? Damn, Jim, think. Okay. I want everybody on YouTube to watch this video tonight. If you haven't watched it, it's a must watch. If you want to make big money like we did on Friday, it's a must watch. I've hit this every time, and I've made a ton of money off each bounce. It's a must watch. If you had to trade just one time, and you waited and waited and waited day after day after day after day after day, and finally Jimmy comes out, he gets a knock on the door, and I'm saying, last week, all week, we're going to the 200 EMA and SMA for a reversal. Pay attention. Pay attention. That'd be the day I'd trade. No matter what the market condition was, unless we were, like I said, nuked or 911 or for it not be a president gets shot or liberals are shooting at us all the time, so what the hell? I got the word out. Say, hey, I'm next if you want to come get me. Because I ain't going to live like you all. I'm here. Better make it a double-aught shotgun or a 20 or a deer rifle. I really like this spot, man. On spot. I'm gonna look at some calls, see if they're cheap. Just give it a shot. Small shot. Leaps March 20th. Ugh. $500. There ain't no big volume on them. So tomorrow, or the 20th. Did I call the 20th? Yeah, the 20th. They're not cheap. March are cheaper. Oh, God, 13. Wow, they're not cheap either. What? I can't afford these. I shouldn't even alerted it. Well, the 460s. They got 2,000 contracts. Okay, I got what I want to do here. I could get the February 13 460s. The spread's a little bit too wide. I'm going to show you something here. This is why I don't want to take it right now. See how wide the spread is from 505 to 610? I want that to tighten up. That's too loose. So that I don't like that. They're very expensive. They're at a real good spot. I mean, you know, I like it, but I'm not going to buy it when you have $1.05 spread on it from between the bid and the ask. That's got to be a lot tighter. We'll look at it again tomorrow, and I'll remember 555. 5555555. But nah, that's fucking sucks. I wanted a couple bucks. Hello, Miss Belly, Matey, and Bobby. In the manger, known for a bed. Little Lord Jesus, the stars in the sky, Yeah. SPXC. Let's see, Irene, IREN. Zim, BAC, MSFT, PLTR getting ready to squeeze again. Coming back to the shoulder line of the head and shoulders on IWM, I called the resistance up here at 267.54. And once we had that triple top, it came back down and hit the 200, called it, hit the 50. Then we had this knife to a double top. So it has to hold here or we do a double bottom take. Let's see where my phone's at, if it needs charge or if I get a message. Look at the plumber. The you know those sensor sinks where you put your hand up and you don't have no knobs and you got the sensors? Can you imagine how much them things cost? $500 or $600. That's just the cost of the sensor. I probably don't have a picture of it. I throw away a lot of my pictures. I probably do, because this bitch ain't changed it out in months. Can't wait to start working on my property. I'm really excited about that. Can't believe I ain't got a picture of that sensor. SPX is coming down to a head and shoulders. We got a solid support back here again. If we don't hold the 50, we have 3 black crows. We got a, looks like a dragonfly or a hammer. I don't know if it's come back, and it's 108. God darn, it's the time of day I don't like trading. Where's my...
coming from doesn't feel great, but it is a reasonable number. Inflation's, I would call it under control at this point, but now you're getting affordability rhetoric out of DC. How does that impact the Fed and how they're viewing, along with the transition of the chairman, and how much influence is he going to have? Maybe he gets another 25 to 50 basis points out of the Fed. I think that's unlikely. I think that's it. That's what they do for the year, and we land there. But again, the politics and all of it will make it interesting.
SPY breaking out. We got a triple top.
Last quick question. Which one do you think might be
Definitely
more
hit my support.
story? Is it going to be the jobs report?
Good call.
Or the CPI report this week? Which one do you think might move the markets one way or another more than the other?
I would take the CPI report. I think on that one, I think that's going to be more impactful.
Good job.
Where I think that's more impactful to confidence rather than the labor market. That's been a little more stable. The CPI data has been a little choppier. So I'm looking for more direction and focusing more on the CPI number. But that labor market number is going to be important as well. But I'd take CPI over labor market. If you were going to hold one hostage for a month, I would want the CPI and not the labor trend.
Yeah, understood. I mean, do you think inflation will be sticky? Is that why?
Yeah, I think there's a potential that it is a little sticky.
Ooh, that was a good question, Nicole.
That's a bigger
I love you.
If I'm a Fed governor, I'm a little more concerned about that one right now.
Yeah. All right, Jeremiah Reef Miller.
There you go.
Thank you.
Resistance.
Chief Investment Officer.
If you can count to 4, you might make a little bit more. Inverse head and shoulders. 2, a quad. Actually, it's a triple top with 2 wicks. 1, 2 bits. Go away, go away.
Washboardjim on the market floor. Trading moves like a lion's roar. Sneaky snakes let us pass the rest. Breakout moves, he plays them bad. Yeah. Jim likes titties and telemarketers too. Teaching fools like me and you. A work of art, his strategy's tight. Washboardjim in the trading fight. Pullbacks come and the charts will rip. He calls the shots, never loses grip. Selfless soul with the heart of gold. Teaching secrets that never get old. Jim likes titties and telemarketers too. Teaching fools like me and you. A work of art, his strategy's tight. Washboardjim in the trading fight. Lights and candles, a dance on the screen. Risk and reward in the world so mean. But Jim just laughs, tips his old hat. He's got the moves, imagine that. Jim likes titties and telemarketers too. Teaching fools like me and you. A work of art, his strategy's tight. Washboardjim in the trading fight.
Playing the bell. Jimmy likes telemarketers and titties too. Or titties and telemarketers too. Vic's low day. Do 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 do. Me and you. There goes a spy in the SPX. Spotify's coming back to support. That was a fast half hour.
Buy ratings do have above 90. One was 90.
Man, I love the way she's dressed today. Look at that
So there is
collar.
optimism there surrounding M-chip. Okay, let's talk about Intel. What's going on here? You found a bullish trade.
Yeah, stock's moving higher today.
Intel.
Just slightly, but it's still up about 38% so far, just in 2026. So it's had a good run. It did have that pullback.
I didn't see what Intel was on that pullback.
But this
I might have jumped in that one.
performed well. You
No,
saw that
I
late,
wouldn't have.
fall rally in this.
Let me look
game.
at the
This is
5.
based on those investments that we've been talking about repeatedly, the nearly 10% that the government's invested in.
Yeah.
The $5
No,
billion
it's just too
that
high to
Nvidia
me,
put
but
into 'em, $2.5
this thing got some
billion
momentum.
put into him. And Liputan, he's been in office.
That's a strong
CEO
looking
office
chart.
for about a year now, and he's kind of turned this company around with these deals that he's making. I think one of the key things, and it get kind of lost here, is that they have the new Panther Lake, they have the 18A chip that they're putting out there, but the CPU demand, Nicole, is really starting to explode. We heard that from
CPU
Sue on
demand
TV
is starting to
also,
explode.
but they're starting to get some more pricing power back. And this is a lower priced on a dollar basis stock than maybe some of the competitors, whether it's AMD or Nvidia also. So you've seen traders just pouring into this name. They did say that recently just came out that they have told customers in China that the companies face shortage supplies on their CPUs. They might have lead times up to 6 months. So that's a good problem for them to have because it gives them that pricing power that's going to increase margins as they continue to ramp up their foundry side of their business where they can compete more with TSM because that really hasn't aggregated any substantial revenue at this point. But it seems like they're back on track at this point. We did see some bullish activity in here also. And this was out in the March monthly options. So just 39 days to expiration. Trader bought over 15,000 of the 50 strike calls, paid an average debit of about $3.50. They bought these really early in the session. So the break-even where this trader starts to profit is $53.50 over the next basically 5 weeks or so. That's about 5% above the current share price in Intel. So every day it seems like we've seen more and more call buyers come out in Intel with the expectations that we're going to continue to see these gains in this name. And after rallying about 38% just this year, it's still doing well.
On the one hand, it's a good problem to have so much demand and you can't meet it, or you have supply shortages, or some of the things that weren't working exactly right. And so, Liputan, to your point, I mean, I'm sure he's very happy about the situation, but at the same time, being disappointed that they weren't able to fully meet demand in the markets. And so we're on a multi-year journey. It'll take time and we'll resolve it, but it's not a quick thing. That's the one thing. And will other companies step in to fill the need? And that's the one risk overall. What are your thoughts finally, just a quick thought on the market action?
Yeah, the leaders are back in with tech leading today. We've seen a pullback in staples, which had settled at a record high on Friday. We had seen a lot of the materials, industrials, and staples leading to the upside. That's why the Dow was at record highs hitting 50K. We were on the air when that happened on Friday, and now you're starting to see that reversal. And I think the market needs that at this point, Nicole. They need to get led by some of these names in tech that haven't beaten down, whether it's in the software space. You've seen that resurgence in the last 2 days or last 2 sessions out of NVIDIA and Broadcom. Those things are really participating. So if you think this market has upside traction, it's going to have to probably have some participation and more participation from tech. And that's what we've seen the last 2 trading sessions. So yeah, the broadening out of this rally, Nicole, and S&P 500, just below record highs also.
All right. Tom White, great to see you. Thank you so much. Good luck there on Options Corner every single day right here on the watch list, real options trades that you'll want to see. In the meantime, move back to the AI space. We have a couple of CEOs, the companies coming together. We'll explain after a quick break.
Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast
Technical analysis.
starting techniques like trend analysis, price patterns,
Moving averages, and being in the now.
much more.
No, oscillators aren't in it.
You can ask questions
Being in the now.
directly to an education coach.
You're wrong.
It's interactive learning at its finest. Tune in live or on demand.
Look at that
Go to
SPX.
schwab.com/coaching and start learning today.
I'm Kevin Green, and I track options flow daily, identifying who's buying,
Doodly-doo,
who's selling,
doo-doo.
and how it's going to impact the markets. Watch live on Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education.
Tailored.
Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with...
We're about to hit the triple top. So I did that on 5 minute, I think. Yeah. I did it on the 5 minute. Look at that. Almost hit my target. 267.57. neckline positioning. That's kind of neat. This is something that is, and it goes with triple tops and triple bottoms too. It's called neckline positioning. Right there, man. Boom! What are triple tops? What are they? They're bearish. So I charted up KOLD here. We've been in a long channel for a couple, 3 weeks because of the cold spell. Now it's warmed up. Now we've come to resistance levels that need to break, very important ones. We have a channel of resistance at 2145 to 2341 with a strong buy at 1663. Now, I wouldn't buy it here if I wasn't in it. If I was in it, I'd see if we'd break 2145 as long as the weather kept warm. If you hear a forecast where it's going to start getting cold in, you get out of the trade. If it starts to get up in the 60s and 70s, it's going to break out. $10.4. Right now, you're a little bit bullish, but nothing big. We've had the bounce off the head and shoulders. Okay, that's code. My knees. I gotta get me some hot chocolate. After I drink a big glass of water. I'm sitting too long. Might go walk a little bit.
Make headlines and traders make decisions. From earnings shocks to sector rotations, we're tracking the catalysts that move markets right into the close.
Here on the floor, I bring you real-time sentiment from traders driving the action.
And in Chicago, we break down the data, technicals, and trades you need to see before the bell rings.
Live coverage of the close every single day.
This is
Market on Close, live weekdays 3 p.m. Eastern, only on Schwab Network.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
I'm Sam Vardis, live from the New York Stock Exchange. When the market moves, we're on it. Getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
Welcome back to the watch list. Time to talk about Bitcoin, where people have taken out enthusiastic investors in Bitcoin have borrowed billions.
Oh, God.
Now what? When you saw Bitcoin at 60,000.
I can't believe people are so
Ray
stupid.
Salmon, head of markets, Cointelegraph,
I'm gonna-
and Samir.
Whatever you do, don't borrow money to trade. Just don't do it. Don't do it. Don't borrow it from family. Save up. Earn it. Don't borrow it. You borrowing big money to buy Bitcoin? Are you a freaking idiot? It's still speculative. Don't borrow money to trade. That tells you you're addicted to gambling.
We are in levels that we haven't seen for a long time, and those are normally great opportunities to buy, especially for long-term investors.
Do we still think that Bitcoin, was sort of created as this alt currency, but now you had governments buying into it? That the idea of Bitcoin has changed a little bit. You have institutions buying in. Ray, what say you about Bitcoin? What happened? Why did we go down to 60,000? And
Because we hit 100,000. It's overbought.
Right. Well, I agree with Samir, and Bitcoin's near-term weakness was driven by a combination of macroeconomic and equities-related factors. It just wasn't crypto-specific catalyst this time. There was huge investor anxiety last week over corporate earnings, especially big tech, software companies, the Mag 7, and as stocks softened, we saw de-risking in Bitcoin price also. Since the end of 2025, the market has shown apprehension about the cost of financing and the valuations of, the AI build out. So investors have walked into 2026 with the perspective of it being a prove it or a lose it year regarding revenue versus cost when it comes to these AI invested companies. And that's why we saw the Dow and SPX dropping 400 to 500 points per day consecutively last week, and Bitcoin fell apart alongside that as investors de-risked, and we also had liquidations which accelerated the price downside. Now, Bitcoin's actual reason to be has not changed. So the actual investment thesis and the 17 years of statistical data and historical data, which kind of form the foundation of why people have invested in Bitcoin, has not changed. So I agree with Samir that it's likely a discounted buying opportunity.
You think it's a buying opportunity? I mean, when we think about the leverage people put on their And we think about the outlook and the high hopes that people were thinking 150, 200,000 in 25. We didn't get there. What are some of the outlooks going forward, Samir? What are some of the numbers you're hearing being thrown around that you think really could be realistic?
So I think in the short term, it would be reasonable to see Bitcoin trading sideways. And we expect Bitcoin to trade between 60,000 and 90,000 for a few weeks until we have a new trigger that could take us to new highs. And if history rhymes, once those new highs are achieved, we might see a breakout and then Bitcoin maybe going to 150 and $200,000. That might take a few months. We need a recovery. We need to clean up the macro environment and all the regulatory clarity risk that we're still seeing around the Clarity Act. So all those things contribute to, I would say, will contribute to a better environment in crypto overall. And that's when we expect to see a new hike and a new all-time high being formed.
Could we have everything happening at the same time? Is that part of the issue that we saw recently, Ray? Is that, we saw volatility happening in gold and silver in the markets. Wash was announced. Can everything go up at the same time? Gold, silver, Bitcoin, and the markets?
That was the narrative that we were promised by our smartest analysts in the space, but that's not actually what happened. So yes,
Never happens. They're never right.
The gold and silver rally and run it up.
SPY pulled back support here.
I think that had a negative impact.
Just to stay bullish, we need to hold this. We can easily drop down and hit 694.77. 694 period. We got a triple bottom. We can even go lower than that. Hike. Don't tell me what's that chef's name? Oh no, this is bad.
action to crack down on sales of compounded GLP-1s.
I like your dress.
At the same time as Novo Nordisk filed a lawsuit to ban Hims & Hers from selling copycat versions of its weight loss drugs Wegovy and Ozempic. Novo Nordisk
Copycat.
shares moving higher though after Hims & Hers pulled its compounded version of the Wegovy pill from markets over the weekend.
Boy, they had so much hype on that pill.
Davidson, analyst
They pumped this stock like it's never been pumped before. I didn't trade it once. There's a lesson to be learned about pumpers. Okay? These people, I like it, they chart. They I like that. But I wasn't into buying this. Hims. There was a couple times I called the trade out and it bounced. But this is bad. This is real bad. Marley, I love you, and it's Power Hour.
On the Dow, we've maintained above that 50,000 mark. We're 50,183, and the Russell 2000 trading about 9/10 higher at 2693.84. Taking a look at the 10-year, we're at 421. We've dropped a basis point since this morning. The dollar 96.69. Gold is up almost 2.5% today, 5,099.90. Crude oil also trading higher, more than 1% higher, in fact, at 64.29 a barrel. And Bitcoin did manage to get itself back above that 70,000 mark, trading about 1% higher at 70,925. I do want to check in with Sam in New York, though, and see what top stories caught her eye today. Sam?
Thanks so much for that, Marley. Well, they were less about stories, but just general trends that we are seeing as we build on the momentum that we saw on Friday.
Dead cat bounce.
Major indices that you just mentioned. If you take
I
a
want
look
one.
under the hood right now, have a look at software that's been recovering. Some of those names have actually bounced back after that rut that we've seen in recent weeks. The IGV is up over 3% after its big downturn. Some of the names that really stand out to me have been Microsoft, which is up over 3% right now. AppLovin is on a tear, up 14%. ServiceNow is also rallying. Workday, though, is still under some pressure on some executive changes over at that company. There seems to be some investor concerns that remain with that story. But Wedbush's Dan Ives saying that the software Armageddon that we've seen, that he calls it, has been overblown in his perspective. And he added, in fact, ServiceNow and Salesforce to his AI 30 list and gave a couple of other stocks the boot. So Morgan Stanley has also come out today talking about some of the opportunities within this beaten down sector. They think the valuations have actually created some buying opportunities. You and I were talking to Shonali Basak about this on Friday, and also naming Microsoft, Salesforce, ServiceNow, Shopify, of course, which we'll hear from this week, Palo Alto, and some others as well. So an interesting move as far as softwares are concerned. The metals also rallying, no doubt being helped out by a weaker dollar today. The gold rally is back above 5K. Data out over the weekend actually showed China continuing to snap up gold for a 15th month. That comes from the PBOC. We know that this has been a structural driver, this aggressive central bank buying, and China has played a big role in that. We're also seeing silver up, palladium, platinum also higher. So it very much looks like a nice rebound for some of those. Look at that, silver up over 8% right now. Marley and Jenny, I'll send things back over to you in Chicago with some of today's top movers.
Thanks so much, Sam. Yes, like you mentioned, Jenny Horn joining us here in our Chicago studios to take a look at some of the stocks that are on the move today. Let's start with one of the biggest stories, one we like discussing, this Hims & Hers, Novo Nordisk development. Really more focused, though, on Hims & Hers right now because there are several developments here, not just them pulling their weight loss pill from the market, but now a lawsuit, some FDA scrutiny here, and a major move to the downside.
Yeah, I mean, this is a shareholder nightmare, frankly. If you read into the headlines, it doesn't get any more positive when you break down some of the individual components of the story today, though. So Novo Nordisk did say that it has filed now this lawsuit against Hims & Hers for infringing U.S. patents and its compounded semaglutide products for the U.S. market. But This also follows, as you mentioned, Hims very quickly reversing plans to introduce its own compounded version of Novo Nordisk oral weight loss drug. So after the General Counsel for Health and Human Services made referral to the Justice Department for these potential violations of the Federal Food, Drug, and Cosmetic Act, the company did say that they will not be going ahead with the launch that was, again, only announced last week. But so
Jim, what was for
far,
lunch
it
today,
only,
brother?
I think, illustrates as Novo Nordisk, since launching its oral drug, which hit the market in January, has seen no difficulty with supply. Hims, though, is now going after Novo Nordisk, saying in a statement earlier today that the lawsuit is a blatant attack by a Danish company on millions of Americans who rely on compounded medications for access for personalized care, and that they will continue to fight. But the question is now whether they have jeopardized the business of creating these compounded injectables. And so semaglutide is, of course, the active ingredient that's found in Ozempic, Wegovy. But we know that from at least Novo Nordisk's claims, they said that some of these compounded drugs are being mass marketed and being somewhat misleading for what's actually in the medication, as they did find that nearly 86% of some of these compounded medications had additives, which then creates various risks of like anaphylactic shock and just various allergies that can emerge from, of course, not knowing the entirety of what you're taking. But all that to be said, this move today has been, we've recovered off losses, we're still down 19%. I mean, only adding to the over 40% pain we've seen really rewrite shares to the downside over the last few weeks.
Yeah, certainly, and the FDA is saying that they are going to also step in and crack down on some of what you've mentioned here, that they're sort of masquerading as a copycat version when in fact there are things in there that are not included in the original versions of the drug. So just not a great day for them. But let's flip to the positive side. Talk about Oracle. They are up double digits following a very bullish note from D.A. Davidson and arguably a bullish note for OpenAI as well.
Yeah, and I will say the D.A. Davidson $180 price target, they did upgrade shares to buy from neutral. They do believe in the revamped OpenAI structure that it could now help really return Oracle to position itself as Google's top challenger specifically. And we also saw a note out of Melius Research with a bit more of a neutral stance, as they actually downgraded shares to hold from buy, $160 price target, saying that they admire Larry Ellison for going for it here, to quote them. They said that right now we could see a pretty tough several months really, as a debt and equity could be an overhang for some time, as they now question what should really a stock be sold for with no free cash flow until the 2030s at the earliest. Bernstein was another with a 313 price target, down from 339, with an outperform rating, saying that again, a lot of the challenges have been around how they will fund the AI data center build, but they do think that right now that they will be able to meet these funding requirements through at least fiscal 2028. So it's all concerned about funding, yes, but I think that a 10% move today for just some fairly muted analyst commentary is a pretty nice sign that there's still an appetite, obviously, to buy shares at a lower level, which was where we've frankly seen the revision to the downside, as a lot of these software names have taken a bit of a hit in just the last several weeks.
Yeah, D.A. Davidson adding to that with this pullback, they think the shares are more fairly valued now where they currently stand, part of the thesis as well there. Staying in positive territory, Kroger. They've had a nearly year-long search for a new CEO, did not want one out of the current organization, and they've landed on a new one with a pretty big resume.
Yes, and I think that that is hugely why we're seeing this upside today. Kroger naming Greg Foran, a former executive at Walmart, as its next chief executive. First reported on Sunday by the Wall Street Journal, but we know that they've been since looking for a leader for about a year now, after we saw their longtime CEO, Rodney McMullen, actually leave for undisclosed ethics violations after nearly 11 years at the helm of the company. So Foran will take over effective immediately. And as you mentioned, they've been wanting to explore other talent outside of just their current organization. And I think it's encouraging that Foran did help oversee a turnaround of Walmart's U.S. business from around 2014 to 2019. He focused on improving their fresh food selection, their overall operations, and their appearance of their stores during that time. So in his 6 years at Walmart, that he was able to prove that he delivered on comparable sales that were positive for 20 consecutive quarters and managing more than 4,600 stores and 1 million associates. So he definitely has the resume to be able to fill this role. But as we know, a lot of times these leadership shakeups can take some time. It's not an instant win for shareholders or price performance, really. But today, at least, up 4%. We've pulled back a bit from session highs here, but definitely a welcome reaction to their new CEO.
Yeah, and a really interesting commentary about the new CEO, saying when he was at Walmart, he would actually go into the stores and inspect the produce and the meat for himself. And when he was the CEO of Air New Zealand, they were saying he would get on the flights and work with the cabin crews to serve drinks so that he fully understood the experience.
I kind of love that though. Like, I was reading a note that was like, maybe he's a bit too hands-on, but for a pricing environment as challenging as a grocery store is to operate, frankly, I love that he's like really I mean, truly the trenches of the whole operation.
Certainly. I thought that was very interesting too. That really struck me too. All right, let's talk about another new CEO here, but this one being met with a downside move. We're talking about Workday here, and I'm going to say a new CEO, but he's a previous CEO, in fact.
Yeah, so Workday now tapping their co-founder and
Got a fallen wedge on Oracle.
who's returning as CEO as they enter this next chapter to focus on their evolving AI era and strategy. And so current CEO will be stepping down, but will remain a member of the board. Will continue though to fill a strategic advisor role to their new CEO that will be effective immediately. Now, as a result of this, I did see an Evercore ISI note that actually reduced their price target by $100 a share to 200 from 300. But they believe that if there's any positive as a new CEO to take the role, that right now it's the sentiment that Workday is pretty much at an all-time low. The street is already pricing in material deceleration in the business. So they do believe that from any shareholder perspective, any real benefit from this is going to take some time. And I mean, overall, analysts do still very much favor this name. It has a outperform or solid buy rating on average, but I do think that it's a very contrasting price performance with, say, Kroger, that we were saying maybe could have needed this refresh from a leadership standpoint. Workday's leadership refresh not being met with the same positivity, and down almost the perfect inverse by about 5%.
Yeah, certainly is. Jenny, thank you for breaking down those top stories for us today. Jenny Horn, the co-host of Next Gen Investing here on Schwab Network. I do want to check back in with Sam, though, and see what we have coming up for the rest of the show. Sam?
Well, Molly, we will broaden out this conversation and discuss the recent volatility in the market and the state of the AI and tech trade and how you should be positioning your portfolio going forward. Market on Close will be right back.
Hey, investors, you know the market moves, and Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k'ing, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
I'm Nicole Pedalides, live at the New York Stock Exchange, and this is the Watch List. Your midday view into the trends in the markets with a sharp focus on technology, innovation, and companies leading the next wave of growth. Big movers, real-time interviews, and insight from analysts, founders, and market voices you trust. The Watch List, 2 p.m. Eastern, only on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term
Denelli
investor?
Shea, who
Our
is
investor
that?
webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand.
Shelley.
Head over to schwab.com/coaching and start learning today.
Shame on you. I thought you were good. Shelley.
Real-time access, data-driven analysis, from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
Welcome back to Market on Close. I'm Sam Vardas on the floor of the New York Stock Exchange alongside Molly Caden in our Chicago headquarters. Just a quick market update here as we have about 45 minutes left in this session. And obviously we came into this week with a few uncertainties. Globally, we were looking at election over in Japan. We were looking at some of the political chaos and turmoil over in the UK, and China telling its banks to limit
I want one. Oh, here's the pullback. Prepare ye in the name of Washboardjim. SPX. The 6980s. Prepare ye. We're coming to the 200 EMA. I'm going for it. What time is it? Plenty of time. Whoa. No, 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 no. No, no, no. Wait. Wait, 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 wait. Wait, 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 wait. There's the hammer. SPX. Calls. Scalping. Lotto. Strike. 6980. Off the 200 EMA. I might start in small here because I got another hammer. There's the doji. The QQQ's on the 200, the SPY's on the 200. $1. We're at 95, 90. This can easily drop down here to this. And I'm just a little early. We got 5 at a buck. If we hit the 200, I'll get 10. I think we're going to hit the 200. Probably been best to wait there. There it is. Damn it, I should have got 75. $85. I got 85. Now she'll drop to 75, watch. There it is. I don't think I'd have got it, but I might now. Come on, baby. I get 90 average. Man. The IWM could hit the 63. We hit QQQ hit the 200. SPY broke the 200, and there that broke it too. Still support as long as that body stays above it. Yuck. We held up all day long today. Now it's finally letting loose. Can't stop it now. It pushed me a little bit too far out of the money here. got that wrong again, twice. We're back at support. $0.30. I was thinking it. We got a triple bottom here, and I'm in it. If it doesn't hold, I'm gonna have to take 2 losses today. This is very important. It holds right here, or I just jump out. It's not really in a good spot. It ran up to 69.75. I had a resistance to break on COLD at 21.45. We hit 21.31 with a double top. Man, shoot. Well, 2 losses today. Oh. Well, I'm going to wait for the pullback, and then I'm going to load up. Not today, but when we get it. I still think we're going to retest the double bottom with a higher low on a lot of them ones that were off the 200. We're cook me a couple sausages and take a nap. Streaking down, down, down. Looks to me like support could be around 69.45. Didn't hold the triple bottom, that's for sure. Yeah, we got a double. We got a neckline, shoulder, inverse head and shoulders on Amazon. Right to the right shoulder. They said a lot of the Super Bowl ads were about AI. I didn't watch it. I don't watch football anymore. I just don't want to get involved in Justice Warriors. Life was a lot more fun back in the 70s. They still are. They're more fun now because I beat up on the liberals, but I'd rather it be like it was in the 70s. But I didn't grow up in, I grew up in Portland, grade school, but went to high school in Crack City, Springfield, Missouri, one of the meanest cities in the country, top 5. One of the worst in a way when it comes to crime and idiots. PANW looked real good. All my favorite tickers are up. Today's volume leader, Tito says, PLTR, Tesla, Oracle. I almost hit my support here on PLTR, but I won't swing it. I'll wait until the morning, but I'll be watching it close. We hit 140.19. I'm going to put this line on here. I see a little yin yang down there too. Right straight across. So right there. I'll set the alert just right up. Yeah, that'd be good. At 140.84. There's a couple another good spot right here. I mean, there's a lot of good spots on this. Kroger's getting a new CEO. Schwab.
The Schwab Network.
Oh, PLTR hit my support.
On SchwabNetwork.com and on all your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free. Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Welcome back to Market on Close. I'm Sam Bartis on the floor of the New York Stock Exchange. It's now time for overlooked stocks. Shares of VSAT are rallying today after Deutsche Bank upgraded shares to buy. So I'm joined by George Siller, senior markets correspondent, to talk about Viasat. I suppose it's a bit of a giveaway in the name, but what's Deutsche Bank saying that's behind this call?
Well, I think a few things are going on. I mean, first off, if you look at Viasat, this is a company that's really participating in the secular trends associated with low orbit satellite communications, internet. But at the same time, this is a twofold company. Not only are they a low orbit satellite business and communications business, but they also have a defense and aviation technology segment. And if you look at the stock over the last year, it's up over threefold of 300%. It's really doing well associated with what we're seeing from a secular standpoint for Wi-Fi communications and things like avionics and in-flight Wi-Fi. But also the fact that as a complement to 5G communications, we are starting to see satellite fill the gap, not only in cell phone technologies and communications, but also in broadband with companies like Iridium and Starlink as mainstay competitors. And so Deutsche Bank is now reevaluating Viasat based on some other promising aspects besides the secular components to their business, which have been in high demand. But the company is being spun off into two separate divisions, or two companies. One is going to be their traditional communication segment in satellites, but the second business is going to be their defense and aviation business. So that essentially will create a separate multiple that the aviation business will trade at, which basically unlocks value, and that's essentially what Deutsche Bank is looking at with their call, with the price target at 48 from 36, a little bit behind the curve in terms of the speed in terms of but nonetheless, if you look at the company, which recently received approval after it bought another EU-based competitor, Inmarsat Technologies, over the last couple of years, they're looking now to basically spin the business off and increase shareholder value, irrespective of the fact that top-line sales have been growing quite nicely along with price.
Right, okay, so to unlock some shareholder value here with some of that spin-off, encouraged by that. You mentioned the mobile and the broadband, but what about the exposure? I've been looking at some headlines around the auto sector as well, with a potential tie-up, or at least some news around BMW in cars as well. I mean, is this perhaps another catalyst as to, the next leg of this, business for them?
Yeah, it is. I think if you consider the space race, it's not necessarily about, going into space or doing research. I know that's part of it, initially what NASA was developed to do. But right now, everything around space technology is communications driven. And if you just think about the nature of autonomous driving and the connected vehicle, in order to achieve full safety, you need full connectivity that's uninterrupted. And so there is, of course, spots with 5G communications and ground Wi-Fi, which can be interrupted, and that's why we're seeing a huge push to low orbit satellite communications to fill that gap. And eventually, it may end up displacing the traditional tower and broadband-based, services we have here on the ground. So, for what it's worth, yes, the connected car is a huge part of this push on a secular basis, and that's why I think, alongside Tesla's autonomous driving, if you look at SpaceX and Starlink, it's really communications business that brings synergies to the connected car. So these are, again, secular trends that are really catalyzing these names. In fact, this entire group, if you look at, for instance, Rocket Lab, ASTS, Space Mobile, these are all companies that have done extremely well in the past year based on these secular trends.
Yeah, no doubt about it. I mean, look, it's up 12% today, rallying in double digits. It's had a pretty good run over the last year. I'm seeing it's up about 300 or so %. Just looking across some of the analyst consensus here, I mean, it's a bit mixed. There is someone in the underperformed camp, 2 on a hold. Most, though, are in the buy camp. You've got the lowest price target range from 20 to up to 52, which applies just a slight bit of upside from where we are currently. But is there anything else that sort of sticks out to you about what the analysts are saying here, or what this company is doing right now?
Well, so one thing you'll notice is if you look at the price action right around 47, just roughly speaking, the high price on the street is 52, the mid is at 45. And so right now it's trading somewhere between the mid and high point. The challenge really lies, and this is again something you have to be mindful of in this name, is the earnings estimates for 2026 are $1.29, but going into next year, they go down to 64 cents. So that suggests that the contracts that the company has, at least through the remainder of this year, are intact. But going into the next quarter, especially as we move into the back half of 2026, the earnings estimates will need to be adjusted higher based on contract renewals, recurring revenues, or essentially more backlog. So that's important to keep in mind with this name. Again, and that's why I think the stock is trading near the higher end of the fiscal target, just because there's that element of, continuation in earnings growth. And like I said, right now, if you next year is expected to be lower than this year.
69, 69, 41.
Guidance revisions that the company provides, Wall Street, and of course that'll trickle through to price action, in either direction, higher or lower.
All right, good look at VSAT today. Yeah, trading high by about 12% right now. We are up quite considerably over the last year or so. George, we'll check in with you a little bit later. Thanks for unpacking that one and helping us out with Viasat. Marley, I'll send things back over to you in Chicago.
Thanks so much to George and Sam. We are nearing the end of our market session. We'll be breaking down today.
Oh, God.
We'll get you
Magnificent.
set tomorrow next on Market on Close.
You can give me no A pluses for the great trades I made.
Real-time access, data-driven analysis from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
Opportunities don't stop when the market day ends, so neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's market.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for this stock. And that could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Hey, Dad, I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The 2 grandchildren, planning for their college educations. Someday it'll be their turn.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization.
3 more minutes.
Market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Still holding up strong, the market.
We are back here on Market on Close. I'm Sam Vardis on the floor of the New York Stock Exchange alongside Marley Caden in our Chicago headquarters. So we've just got a few minutes left in today's session. I suppose, Marley, heading into today, we were all wondering if we were going to build on the rally that we'd seen on Friday with that stunning turnaround. I mean,
and we did.
On the Dow. We have managed to hold that now, although pretty range bound on that particular index. I mean, sort of flip-flopping between these sort of fractional gains and losses today. But by and large, it looks like technology continues to be in the driver's seat with that usual suspects, your Nvidias. In fact, Microsoft has managed to recoup some off the back of the software or the Armageddon or whatever you want to call it that it got sort of caught up in. But we have seen certainly some of those beaten down areas of the market getting snapped back up, whether it's a buy the dip mentality here. I don't know, but we've also seen the metals staging a nice recovery here too. Obviously, part of this has got to do with the dollar. We're seeing a bit of a pullback there, maybe something to do with the strength that we've seen in the yen, given the big developments out in Japan overnight. Obviously, we've seen some pretty sideways action in the 10-year yield. I think a lot of this positioning really feels like we're just waiting for the data this week with, of course, the jobs and the CPI out on Friday. But I mean, aside from that, I mean, what else has sort of been catching your attention today?
I think you really hit the nail on the head there, Sam. I mean, most of the conversations I've had today, pretty much across the board, whether it be a trader, an analyst, an investment professional, is that everyone sort of anticipates this sort of sideways action until we get some of this data on Wednesday. Now, how significant that data is going to be in terms of being a catalyst remains to be seen. There is some debate about how much the actual numbers matter versus just that they confirm expectations. I seem to hear more of that sentiment today, that we just want to have confirmatory expectations on the labor market and inflation as opposed to what the actual numbers are, but that no major swings. But you did mention software in there. We did see some nice bumps in software after, you know, all these terms we're hearing, the Armageddon and the massive sell-off that we saw. Big help, you know, of course, from Dan Ives putting some of those software names into his AI 30 picks and saying they aren't fundamentally or structurally broken. So I think that was a good boost. But, you know, Semi's under some pressure today on that note that Samsung might be producing their own next-gen high-bandwidth memory chips as soon as this month. So, again, you know, when one sector seems to move higher, we seem to have another one moving lower. So likely more of the sideways action.
Yeah, we've certainly seen that bifurcation within the tech sector itself. And this Samsung story is really fascinating because it's been trying to catch up with its own South Korean rival over there, SK Hynix. But now it looks like some of this is around the competition concerns with Micron now as well. I mean, who is vying for some of that positioning to supply to the Nvidias of the world with the CPUs? So really fascinating what we're seeing playing out in memory. But it feels like, Marley, I don't know about you, there's no really major headline that's driving what we're seeing today, which perhaps sort of suggests why we've just seen kind of this range-bound trading action. I mean, I know it's different with regards to the big swings we're seeing as far as technology, but it feels like it's just sort of individual stories that are driving the action, whether it's up or down today. And there still very much seems to be this debate in the market right now as to whether what we're seeing, as being pointing out in the Wall Street Journal, is something that is concerning under the surface. And I suppose we'll get more of an update with the jobs data in a couple of days as to whether that confirms some of the worries or whether this is just fundamentally good. The momentum that we are seeing in the rotation. I mean, if you ask Ed Yardeni, he says it's the roaring 20s. He says this is good for the economy. But here is your closing bell.
It's over.
So another day higher for our stocks. In fact, the Dow Jones, after a little bit of a choppy old day, just managing to clear the bar there, just sneaking in with some fresh gains.
It consolidated after that big run Friday. I think we're in good shape.
134 there, putting on about 18 points or so. The S&P 500 up a 0.5% there. 69.64 was our finishing number there. And the Nasdaq, here's your...
I'm going to take some time off and have dinner and watch some videos. There's a lot of good videos out I want to watch. Get caught up. Mike Tyson had zero tolerance for disrespect. So, I must say thanks all. And we'll catch you tomorrow.